Okay, here we are. So, thank you very much, everyone, for being here. It's really a pleasure for me. This is a very new initiative, the Observatory. We launched in 2021, so 9 months, more or less. But I think that we did a lot of things in such a short time, and the number of people here and the companies that you represent, I think, is a very good start and the best sign that we are doing the right thing at the right moment, probably. So let me introduce a bit about the Observatory. So what is embedded insurance? Embedded insurance is about placing insurance products and services in the day-to-day flow of customers, lives and works. And when we say customers, we mean personal customers and business customers, as we know that embedded insurance is getting a lot of traction also in the SMEs market. As an observatory, we have a scope. We cover both embedded insurance and open insurance. Our mission is to make the observatory a point of reference in the market. And the long-term vision of the observatory is to contribute making embedded insurance grow and making of embedded insurance one of the 3 most relevant distribution channels for insurance. What we have been doing so far. So we launched formally in January. We did our kickoff and planning workshop. In the first 3 months of this year, we ran a 3-month research stream where we interviewed over 40 organizations, insurance and insurance companies, insurtechs, distributors. In April, we presented the research document with the insights and the outputs of the collected during the researches. That was a very positive workshop with a lot of participants, and we shared the research documents with all of you. Everything we do for the members of the Observatory. As you see also today, the Observatory is not an organization that organizes conferences. This is not a conference on embedded insurance. This is a meeting of the members of the Observatory. So the documents that we share with the members first and foremost, and the part of our outputs we share also outside of the Observatory. But 90% of what we do for the members of the Observatory. Then in May, we ran another workshop with the participation of Barclays Investment Bank and our partners of Sønr, where we talked about how professional investors see opportunities in embedded and open insurance. And today, our big event, the plenary meeting. Now I will shut up myself and I will leave space to the great speakers that we have. And at the end of this meeting, we will also provide you a preview of the report that we've been preparing in the last months with the collaboration of our friends and partners of Sønr. Just a quick overview of what we have been doing in terms of larger ecosystem. We have over 1,200 followers in our LinkedIn page, and as you can see, they are all organic. I didn't send one invitation to my network to put a like on our page, so it's all organic. We have over 170 subscribers for the newsletter, continuously growing. We have followers from all over the world: Europe, North America, Africa, Asia, Australia. We have created an ecosystem. We have created a number of collaborations with Reuters Events, InsurTech Insights, Open Future World of Marie, that gently had us in Marbella last month for their amazing event. We created an ecosystem of members and of partners. Our members are 42 organizations today from all over the world. We have members from North America, Latin America, EMEA, from Asia Pacific. We have big insurance groups. The largest and most successful enablers of open embedded insurance. and other different kind of companies. We have also some companies that will define distribution partners, so those non-insurance companies that want to offer insurance to their customers, like BlaBlaCar, like Kangaroo. And we have an ecosystem of partners that support our activities and that where we also support theirs, including InsurTech Australia, Italian InsurTech Association, InStech London, InsurTech Israel, InsurTech France, the Swiss InsurTech Hub, Open Future World, Sønr, and NIA1. I will tell you a bit more about NIA1 later today. Our ambition is to be recognized as the global excellence center for open and embedded insurance. So we have created a momentum. This is our ambition. In the future, we want to be the point of reference for everyone in the world about open embedded insurance. So our purpose is that if a company is searching information, insights, market intelligence on open embedded insurance, the first name that we would like to be on top of their mind is the Observatory. And obviously, it's not in our benefit. What we do, as I said, we do for you, for the members of the Observatory. This is the plan for the rest of the year. We will take a little break in August particularly, but we will continue our activities. So we are now launching a series of webinars. We have sent a few messages to you in the last months. We have proposed several topics for the webinars. We have already collected many applications. And so in July, we are starting this series. And by the way, the applications for being speakers at the webinars are still open. In September, we will launch the second research stream. In December, we will organize a workshop where we will present the outputs of this second research stream. In November, we are organizing a workshop that will be different from the others. This will be a working group, a co-working workshop. So we will create small groups, ideally of insurance and insurance companies, one InsurTech enabler and one distributor. We want to put those groups together to talk and to work on a challenge that we will assign them. We will let them work together for 30, 45 minutes. And at the end, every group will share with all the others the outcomes of their works. And so this is the plan for the rest of the year. And so throughout the year, as I said, the series of webinars. This is a preview of the next edition. So the Observatory has yearly editions. This is the edition 2022. We have prepared the plan for 2023. So in 2023, we are planning to have 2 plenary meetings, one in Europe and one in North America. We are adding new services. I have very recently started to present you the options and the benefits for the members of the Observatory for 2023. On top of what we've been doing this year, we are going to offer one-to-one workshops to the partners and to offer the possibility to co-create a white paper, the Observatory, and the member. But I will let you know more in our one-to-one conversations. So an exciting time for the Observatory, for the members, and I think that also for next year we have a very interesting offering for all of you, with the final purpose to sustain the growth of your organizations and to contribute, make open insurance and embedded insurance grow. This is the agenda of the day. So after me, I will welcome on stage Franck Pivert from Wakam. And then there will be Gonzalo Rodriguez from Assicurazioni Generali, Luigi Alicante from Mia Platform, Jan Velish from the Care Voice. Unfortunately, he is not able to be with us today. So then it will be the turn of Adrien Lebegue from Zhong Tech. Then we will have Martin Einemo from Insurely that will give a very interesting point of view on open insurance. Then Garrett Olson from Wolt. And then we will have a panel discussion focused on embedded insurance opportunities for the SME market. with Isha Patel from Hiscox, Lewin from Codat, Mark Prinsloo of Superscript, and Flemming Bengtsen from Nimbla. And this will be moderated by Vanessa Alt-Richard from Kangaroo. And then closing remarks from myself with Matt Connolly from Sønr, and then from 6 to 7, again, downstairs, drinks and a few pizza. So, thanks again, and I would like to invite on the stage Franck from Wakam.
Yeah, do you hear me? Yep. Yes. So hello, everybody. It's a pleasure for me to start this meeting. So first of all, maybe a first question. So who knows Wakam? Okay, so we made huge progress in 1 year because yeah, I would assume that nobody knew us. But I'm very pleased to be there. So I'm the Chief Revenue Officer of Wakam, and I will also speak with one of our partners about one specific case about embedded insurance. So let me give you, so I will be quick on the introduction about Wakam, if it works. Yep. So who are we? So first of all, we are a full insurer. So we are a risk carrier working in a B2B2C mode, white label. So this is our job. Our job is to provide bespoke products to our distribution partners. Distribution partners being for us MGAs, brokers, fintechs, and also non-insurance brands like retailers or marketplace. Today, our focus is mainly P&C products, all type of products, except the big, large corporate risk, which we don't do. And now we are opening up also to life, health, and loan protection. So maybe a few numbers. Yeah, just to make it simple, today we are working with more than 400, we have more than 400 partnerships. In a nutshell, we are close to $500 million of turnover, growing double digit in the last 3 years. And we are doing more than 60% of our business outside France. So I know that we are very French. We are French-based, but the reality is that we are doing more than 60% of our business outside France. And today we are working with, I would say, some names that you probably know, which are also very strong in the embedded insurance, like, I don't know, Zigo, Boltec, Cover, Insure, and through and with our distribution partners, we are covering players like, as an example, Back Market, Deliveroo, Uber, Dot, Voy, which obviously has some part of the embedded insurance. Now let's come to the reality. What is embedded insurance? Yuri provided a definition of embedded insurance. I think there is a big question about, is embedded insurance just a new buzzword replacing affinity business? I think we all have that in mind. So on my side, I see a big difference between the two approaches. Usually when we think about affinity business, and when I thought about affinity business when I was in Allianz a few years ago, we always think about affinity business as some kind of a pretty cumbersome process, when it's not exactly, let's say, at the right moment with multiple questions, and in the end you don't even know if it's really, let's say, fit for purpose. I like the definition provided by the VC fund, so Andresen Horowitz, stating that embedded insurance is a convenient and simple customer experience with possibility of opt-out, whereas affinity insurance is more painful, I would say usually painful, opt-in experience. And I think it's really the big change in mindset, trying exactly to find the right moment with the right product, with the right customer. It's a graal of everybody. Yeah? For me, I have also my personal definition. My personal definition of embedded insurance is when we'll be in a world where we don't need to think or to buy insurance anymore, because it will be already embedded in the products, obviously, you own or the product you use. Being, I don't know, a car, a bike, a flat with Airbnb, or even a piece of jewelry that you can rent for a night. And I will give you maybe my personal experience. I have here, you can't probably see it, but I have a small scar here on my wrist. It happens one day when I fell from a free-floating bike I took in the street, and I just, on a slippery street, I just fell by myself. And I remember this day, I thought, okay, no problem for me. I will be insured, or I should be insured, by my home insurance. Or if I'm not insured by my home insurance, anyway, I'm insured by my personal accident. I have 4 years. And guess what? I was insured by none of them. Because there was no third party. I was just by myself. And really, it hurts very badly. And I started to think about maybe I didn't make the right choice. And I was not even insured by the free-floating bike contract. In fact, I was not insured at all. And this is where, for me, the definition of embedded insurance, and where you don't think anymore about this type of questions. And if I summarize what is embedded insurance, it should be very easy to understand from a customer perspective. I think we are very good in insurance to have many exclusions, many things that you don't understand. Simple to buy, and this is where also technology will make sense. Simple to claim, and I would say for me the ultimate embedded insurance product in that case is parametric product, because there is one trigger. You know if you can be reimbursed, yes or no. And in the end, with no surprise. So it's more than just affinity business. You can call it affinity 2.0, 3.0, whatever, but it's more thinking differently. So is it a reality today? There are many studies, and especially coming from the Observatory, showing that there is a huge investments in insurtechs, huge investments on fundraising in the embedded by the insurance player, so embedded insurance player, 800 million euro invested in 2021, and probably up to 20% of the business that should move to embedded insurance, starting from only 1% today. What we see within Wakam, we are pretty lucky. I told you that we are more than 400 partnerships across Europe. I will not give you all the numbers, but yeah, we clearly assume that we have already more than 20-30% of our business, which is more embedded insurance. And to give you one number, for free floating, I was mentioning the case a few minutes ago. Last year, we insured more than 200 million minutes of free floating bikes across Europe. So it means that if I was with a free floating car insured by Wakam before, I would not have my issue. And last but not least, I think, what does it mean for us to build embedded insurance? And there are probably four ingredients in our secret sauce. First one is you need to have the right technology. This is obvious to integrate with the partners. In Wakam, we are very focused on API and blockchain. API because it's easy to connect, easy to change, and it's probably the best way to connect in the customer journey. Yeah. Is there something wrong with my microphone? Much better? Okay. Then the second one is also obviously also the ability to co-construct products, because you will not just push the off-the-shelf products everywhere. I tried in my previous life. It didn't really work, because you need to be exactly at the right moment with the right customer. And when we say co-creation, means co-creation obviously of the product feature, the coverage, sometimes also co-creation on the pricing model. When we have the pricing, could be not annual pricing, but also per minute, per day, per task, per delivery, whatever. I think where it makes sense. And it's also something when you have to have this ability to co-create the right products. Then there is the third, let's say, ingredient is you have to play ecosystem. So think ecosystem, meaning that bringing all the pieces of the puzzle together. In Wakam, we are really focusing on building the right products with the right pricing with our distribution partners. But we bring to the table, if needed, for instance, claims capacity, policy admin system with network of TPA. But if the partner wants to do it, he can do it. We also bring sometimes on the, let's say, on the table, additional tools or additional technology. And I will just demonstrate in a few minutes. We also ask one of our partners to bring other technology to, in the end, build the right product. And the last but not least, the right culture. I think it was something that really struck me when I joined Wakam. We have a very strong entrepreneurial culture, meaning that we are able to take risks. We are probably the first ones to insure free-floating bikes or e-scooters in the street. Nobody wanted to do that. And because we wanted to accompany these big trends, it was part of the culture, and we have this culture where we say yes by design. We can say no at any time, but by default, we say yes, which was obviously not always what I encountered in my previous life. So these are really, for me, the four things that are very important if you want really to be successful in embedded insurance. And to give you a big picture, I think embedded insurance today, I think we have different universe. Today we are doing embedded insurance in many areas, being in mobility, being with the gig economy, with, for instance, players like Deliveroo, Uber, Get Here, obviously with e-retailers, marketplace like Back Market. In travel probably was one of the most advanced, mature market. Financial services, we are happy to work with Revolut. And again, it's not just providing a basic product, we define with them a very specific targeted product for their customers. And the last one is home. And for home, I think instead of trying to show you slides, I wanted to have a testimony from one of our partners. So it's done with Goods ID, and Loïs de la Soudière, who is the CEO of Goods ID, will talk about that in a few minutes. It's a very simple and innovative product, which is how to embed insurance in rings. And I will show you just a quick video, and then I will give you the floor.
Thanks, Franck. Thanks, Franck. Very happy to be here. I'm the partner of Goods ID, of Wakam, and to explain you the product we co-developed, we co-construct with Wakam like 2 years ago, and which is currently live and in production. So at Goods ID, as you may have understood in the short video, we dematerialize the certificate of authenticity, and so we we allow luxury brands to issue a digital certificate for each of their products and to register it in the blockchain. So the digital certificate is a set of data, and we secured the data in the blockchain. As it's data-based, this digital certificate is dynamic, and also we can include dedicated services inside the digital certificate. And so with Wakam, we included an insurance product against theft in the Courbet digital certificate. Courbet, it's a jewelry houses located in Paris, in Place Vendôme. Chanel is a minority shareholder of Courbet. And so we decided to include this embedded insurance product into the digital certificate only for the benefit from the owners, from the final customers. That means Courbet offers this insurance to their customers. As you may know, in the luxury industry, it's quite difficult to sell financial products, insurance, or it's quite difficult. So Courbet wanted to offer to their customers an experience, an added value services. And so Courbet doesn't use this insurance product, which is included in the digital certificate, as a selling point. I mean, it's like a cherry of the cake. At the end of the sale, when they sell the design, the ring, the diamond, etc., and at the end of the sale, Courbet tells his customer, well, you know what? Your ring is already insured. You don't buy a ring, you buy a product, a ring, which is already insured against theft. So if your ring is going to be stolen within X years, you just have to come back to us and we'll give you another ring, new, identical to the one you just bought. So on a marketing point of view, it's a very powerful experience. It's new services for the customer. And for Courbet, it improves the image the notoriety, the word of mouth. Manuel Malen, the CEO of Courbet, told me, well, I choose to have this product within my ring, inside my ring, because I'm sure this kind of embedded insurance products will improve the word of mouth for my house and the notoriety. So this product is live for Courbet since 1 year. And the market for this kind of product is huge, is massive. Of course, for the luxury goods, we can use these embedded insurance products for watches, for bags, for diamonds, etc. The market is huge. The luxury market is huge. But also for the second-hand luxury products, this is a very booming market. And the retailer, so the players which sells the second-hand luxury products on their platform, they want now to not just to sell a product, but to sell services. And so these kind of products are very interesting for them. So we're discussing with different players. You see private jet, you may find some a bit bizarre where to put that, but we just signed a contract with a manufacturer of private jet in France, and it's going to use this digital certificate as a maintenance certificate, and we're going to register all the regulatory maintenance within the certificates, and he wants to use this certificate as a platform to offer different services to their customer, to the pilot and owner of the private jet. And of course, one of the services they want to offer to them is embedded insurance for planes. And of course, as this digital certificate is dynamic, so we have the knowledge of the products. We can use it as a certificate of maintenance, and we've got the knowledge of all the data. We can add additional data in the certificate. And we've got the knowledge of the reparations, of the states of the products, which is very interesting for an insurance product, because for all this market of e-bikes, electronic devices like home appliances, etc., when you know the state of the products, you can offer a very specific embedded insurance product for this kind of products. And of course, and all the refurbished products like smartphones, we're discussing with back markets, for instance. This is a massive market and booming as well. And it could be very interesting for them to add like embedded insurance in order to offer more services to their clients. So lots of huge opportunities for this kind of product you use every day. Thank you.
Thank you. So thank you very much, Wakam, for this presentation. Sorry, I just need to give back the microphone, or maybe no. Yeah, we have a few minutes. If you have any questions for Wakam, there is an opportunity now. If not, there will be an opportunity during the networking. But if you want, we have a few minutes for Q&A. So if there are questions, this is the microphone. It's available for you. I would like to welcome now the next speaker, Gonzalo Rodriguez from Assicurazioni Generali. Welcome, Gonzalo. Thank you.
Thank you, Yuri. It's working? Thank you, Yuri, for having me, and hello to everyone. For those who don't know me, my name is Gonzalo Rodriguez. I'm working within Generali in the Business Development and Innovation team. I am responsible for B2B2C partnerships. And I would like to present a couple of slides related to what we view on the terms of future distribution for Generali.
Yeah. Here we are.
Good, thank you. So I would like also to start with a brief presentation of Generali. Generali is one of the biggest companies in the insurance and asset management in the world in these sectors. Last year, we turned 190 years old of history and serving more than 67 million customers around 50 countries. So as you may know, Generali has a commitment to become a lifetime partner to our distributors and our customers. And it's also well known by our unmatched distribution agency network. But something that not all know, that's we have, depending on the local dynamic, we have a multi-channel approach. So in some countries, we are present through own sales force, through agents, also by direct. So for instance, just to give you an example, we have 13 up-and-running direct operations across the group. So on top of Generali, well-known in Italy, and Cosmos Direct in Germany, we have La Caja, that is one of the leading companies in Argentina, also working in direct. So for us, digital is a game changer for the industry praxis, so this is no doubt. So that's why in the last strategy cycle, we reinforce our commitment to start developing even further our digital presence in the digital ecosystem, So we incorporated the B2B2C within Directly platform. That is one of the main initiatives within the strategic planning. And when we talk about B2B2C, the definition for Generali is way larger, so it's not only the affinity business, but we are also including embedded insurance and the collaboration between insurers and fintechs and insurtechs. So if we look at the market, this ambition in expanding our capabilities in B2B2C is even more supported with the market trends. So we recently made an exercise, an analysis on the European P&C business, and we foresee that the B2B2C distribution of P&C products in Europe is going to grow at double pace compared to the overall P&C business. And if we look at the trends, I cannot avoid mentioning the COVID and the social distancing that accelerated as well all this digital transformation. And of course, this digital transformation impacted in different space in between the traditional distribution channels and the new distribution channels. So we see that right now the current revenue pools are more squeezed towards the traditional retail business. So for instance, retail, telcos, utilities. Probably if you go to any telcos in any country, you can get a mobile insurance product attached to your monthly service, or even with when you buy an insurance one mobile phone. But in the future, we see that this current revenue pool is going to be different in the future, more attracted by the digital ecosystem on e-commerce, sharing economy, and of course, with insurtechs. And this is not new for Generali. In the last strategic cycle, we had a commitment to further develop the B2B2C business across the group. So we could converge, we could consolidate this lifetime partner ambition towards these new distributors. We enable new B2B2C ecosystems, focusing in specific high opportunity markets. So we had a great attraction in Latin America and in Asia. And of course, this boosted us to reinforce new innovation across the group. So all these experiences were consolidated in three main differentiation factors. I think some of them are mentioned in the last presentation, but I think there is no secret sauce. I mean, if we are talking about partnerships and collaborations, the main focus is the culture, where we have a partnership-driven culture. So businesses are made by people. So we have dedicated teams in each BU to foster long-term relationships beyond contractual terms in order to deliver outstanding customer experiences. We also are delivering this customer and distribution lifetime ambition to our partnerships. So we have the capability to co-design products, insurance product, but also assistance services, delivering as well better customer experience. And of course, future-ready innovation. We give access, straightforward access to our products, and also we support with investment and innovation to our partners. So all of this reinforce our ambition to become a leading B2B2C players with a platform to manage local and international partnerships in selected segments. So having that in mind, I would like to mention 3 examples that make this concept more alive. So the first concept we said was about this partnership-driven culture. So the first example is in Generali France. In Generali France, we have a dedicated unit that is fully focused on building partnership and B2B2C partnerships. We have a dedicated team of 70 people managing a portfolio of 1.2 billion only in France and more than 100 partnerships, of which 27 are related to the fintech vertical. With the Generali France partnership unit, we are not delivering only on capacity provided, but we also are innovating in different plug-and-play solutions. So we recently developed a new turnkey offer for the new mobility within the city that is really simple to integrate to different distribution channels. So we can do it either offline through a simple QR code, or through a no-code widget to be embedded within the checkout of the e-commerce platform of the partner. This, of course, has no cost implications to the partner, and we guarantee a soft implementation within 3 weeks. The second differentiation factor is delivering this customer and distributor lifetime partner ambition. And I would like to mention the example that we have in Argentina with Mercado Libre, where we build a long-lasting relationship since 2011, where we started enhancing our presence within the marketplace, trying to attack the customer where they are. So together with Mercado Libre, we built the first, let's say, insurance store within the e-commerce. And last year, we reinforced our partnership with Mercado Libre, and we integrated a mobile insurance offer within the platform. So with only 2 clicks, literally 2 clicks, you can add to your chart within the e-commerce an insurance product for your mobile phone. But it's also offering a native experience to the user. So we are fully embedded our solution within the Mercado Libre and the Mercado Pago app. So within Mercado Libre, you can manage your product, you can get the confirmation of your purchase, but within Mercado Pago, you can access to all your data of your product. You can cancel, you can pay deductible, and also you can notify claims. So it's really simple and straightforward experience for the customers. Last but not least, future-ready innovation. So moving to the other part of the world, I would like to mention the partnership that we have with Just Digital, which is a digital insurance marketplace where we are collaborating between Generali, Hong Kong, and Just to deliver new products and innovative products to the domestic market. And we recently launched the first in the market GPS detected passenger insurance. So within, again, if you are riding a bike or whatever, you get a notification within the Just application, and again, in only 2 swipes, you can add your protection. Final takeaways. B2B2C partnerships is an important growth opportunity, not only for Generali, but to the entire industry. The Generali groups reinforce the commitment to develop new partnership and active presence in digital ecosystem. And we are building solid skills to better serve our partners internationally across different lines of business, with Generali on the insurance product side, but also with Europa Assistance in the assistance side. So in case you would like to work together, you can shoot us an email, and we're here to support you. Thank you very much.
Thank you, Gonzalo. Thank you very much. Any questions for Generali? Yeah, Mark.
Hi, Gonzalo. So you mentioned in the French example you had 100 plus partnerships. Do you measure the profitability of each of those partnerships, or do you segment the partners in any way?
It depends a lot on line of business. I mean, probably motor business is less profitable than other mass channels and affinities. So I cannot tell you exactly the profitability of the whole unit, but it depends a lot on the line of business and the type of partnership.
So the size of the partner depends how
Exactly.
much you're
Exactly.
Able to offer them in terms of the bespoke in the offer. Okay,
Exactly.
thank you.
No more question? I think no. Thank you.
Thank you, Gonzalo. Thank you very much. And now I welcome on stage Luigi Alicante from Mia Platform. Wait a second. Okay. Sorry, it's not working.
It works, but it's not on full screen mode.
Yeah.
Okay. Fine. Hello, everybody. I'm Luigi Alicante from Mia Platform, an Italian company, and I am co-founder of this observatory with Yuri that I thank again for this wonderful opportunity. Today, I will try to talk about a theme that has been already discussed by Wakam and by Yuri before me. That is the importance of API and API governance in embedded insurance strategies. First of all, what we are talking about? We are talking about maybe the most important trend of these decades. Everyone is talking about open embedded insurance. They can really be considered the best buzzwords of today. But they are not just buzzwords. We think that these phenomena are happening, and are happening today in all around the world. Lots of conferences, events, and so on about these topics, and everyone agrees about the fact that in the next 10 years, this market will be disruptive, will change the game, will be a game changer. So what is the heart of embedded insurance is the concept of partnerships. So integration with partners is really the key to success, and is also the key of defining new business models that are really emerging every day. In this context, also regulation is changing. We have been in Marbella a few weeks ago at the Open Banking World Congress, and everyone was talking about the importance of regulation in finance and insurance markets. What we are seeing about this is that a new PSD2-like regulation is coming, and that it will really open this market, and it will really give new big business opportunities. So why APIs are so important? In this framework, we believe that APIs will really create this opportunity to integrate insurance companies with new distributors and create new strategic partnerships. Why? Because APIs are standard, are reusable. When you create your new API, you can reuse it all the time that you want. If you have a standard internally, you can reuse your API whenever you want, with whatever kind of new distributors. APIs are able to connect your IT and business areas. The IT, because obviously the APIs is developed by your IT functions, but also your business, because the business leads the game. And then APIs can be also a new way of monetization. For all the digital initiatives, you can use your APIs, Facebook, Google, used to sell their APIs to and create new form of monetization. But why APIs are so important in open embedded insurance strategy? For one reason, they allow you to integrate with new distributors in a much more faster way than before. In fact, APIs are able to accelerate integrations with the new distributors, can activate a new sales channel, can standardize your internal processes and reduce your time to market, and then can improve also the knowledge of your customers, can increase your understanding and profiling capability to know your customers. Why? Because they give you the opportunity to sell your products with new forms of distribution, gives you new kind of data that you can integrate and bring into your CRM and your systems. But when we arrive in a company and we try to understand how they are managing their APIs, we see that there are still lots of problems. Because companies are not used to approach this kind of technology in the best and proper way. Why? Because they still don't have enough technological expertise, and because they really are not managing. They're not managing these APIs. They still don't have managing competencies, and this because nowadays insurance companies are still organized in silos. So, for example, what is going on in claims area, life area doesn't know. And this is a very big problem because when we arrive, when we see, we see that life doesn't know what is going on in claims and so on. So there is still a silo structure and also a lack of internal processes. But to go on to manage these problems, these kind of problems, we believe that there is only possible way, that is creating your own API platform. So what we propose is an open API platform approach, where you have your systems that IT systems have to be organized and by assembling and combining well-defined features. You have all your distributors that can be tour operators, banks, agencies, and so on. But you must have a common path, a common layer, where you put all your APIs, all your microservices, and that is common for all your company, both for internal and external use. So API allow you to expose your microservices to your distributors, and in this way are able to create faster and easier integrations. To manage API, we believe so that every company must follow three main pillars that are processes. So define a governance strategy and define some fundamental company processes that everyone has to follow. Technologies. Nowadays there are lots of different technologies in the market, but these technologies are pivotal to support teams in managing both internally and externally. And then internal roles. You need to have someone who has a common view of what is going on in your insurance company. Key processes. What we mean? We mean that you need to define a governance strategy. You need to know which APIs have been developed in your company. You need to keep track of all the new APIs. You have to create a shared strategy, having a census of all your APIs. You need to map them. You need to define some internal processes and to ensure a minimum level code of quality. So if claims develop a new API, must follow some important steps that are common for all the IT areas, and also define which of your APIs must be exposed externally. In terms of technologies, we mean that you should have two complementary tools that are internal API portal and external developer portal. In your internal API portal, you put all your APIs that have been developed. You have technical documentation and also an environment where you can test your API. In the external developer portal, you must have you must choose which of your APIs you want to make available for other parties, for third parties. This tool is fundamental to allow other developers, other parties to test your API in a sandbox environment. And most of all, in the external developer portal, you must have a technical documentation, but also a functional documentation, because you have to explain why an API is important and which business case that API can solve. Third of all, the API manager. You need, as I said before, an internal figure that must have both technical and business competencies. You must have someone who can govern API management processes, that define which is the roadmap, which is your future strategy in terms of APIs, that is able to coordinate other technical areas. Must be a focal point inside your company for every kind of request by your internal teams, and that is always able to understand which are the emerging methods, emerging technologies, and how to be more effective in the market. So, trying to define an API governance plan, we want to underline the 3 different phases. First of all, when you start, you need to assess and understand which are the processes that are used that are present in your companies. So, let's see what's going on. Then, start with the technological implementation. Find an IT area that can play with the API portal and developer portal, and then consolidate. Process consolidation means that once you are sure that what you have created works, extend to all your company. This is what we are trying to do with the Mia platform, that is an Italian company based in Milan. We are now 140 people. We are present also in UK. We are cross-industry, so we are strong on insurance sector, but not only. And we are very proud to be named Cool Vendor in 2021 for this solution of API and others in software engineering technologies. What I've tried to tell you, we have already done with some insurance companies in Italy. We have some success cases like this, where we have brought our products in an important insurance companies, big company. We have helped them in this census of all their APIs, and we have implemented the API portal and external developer portal. This solution now is hugely used by more than 100 developers in this company. We have enabled more than 50 APIs, and which is the most important thing, we have reduced a lot the time to market of new integration. So, trying to sum up, what is important to have for a proper API governance strategy are: order and keep track of all your APIs. Adopt enabling technological tools. Have a registry where you put all your APIs and know what's going on in your company. Make APIs available both internally and externally to try to collaborate with new possible partners, and define a role of an API manager who has a completely overview of everything is going on. Thank you very much for your attention.
Thank you, Luigi. Thank you very much. Any questions for Luigi on API? Vanessa?
Thank you. Actually, one question. So we have APIs built out, but I wouldn't know what would be the KPI to measure success. Is it like downtime? Is it API calls, the speed of the call? Like, what would be a measurement of success to track the person that's managing the API?
Right, this is a right question. We have not presented our slides on this topic because of the lack of time. But of course, you need to measure. It's the most important thing because if you want to see if you are on track with your aims, you need to measure. First of all, Gartner has a lots of materials on this topic. Maybe the first thing that you have the first KPIs that you have to always keep in mind are the number of API calls. So the most an API is used, the most is important for your company. The most must be seen and controlled. And then the importance of an API on business, on revenues. So if an API directly impacts on revenue, for example, can be an API that helps you in quotation of your products, okay? That API must be always controlled. If that API doesn't work for any reason and someone is calling it, you are losing money. So these, in my opinion, in our opinion, these two are the most important KPIs. But there are lots of them that you need to measure in a daily basis.
Thank you.
Excellent. Thank you. Thank you very much, Luigi. And now I would like to welcome on stage Adrien Lebegue from Zhong Tech. Thank you, Adrien.
Hi, everyone. Can you hear me? Great. Is everyone awake? Not so sure. Okay. We know Zhong. You know Zhong. Okay. Oh, great, great, great. It's a great pleasure to be here today with you. It's a very special moment for us because it's actually officially the very first forum where we present while we're actually building presence in Europe. So we're very excited to be part of that community that Yuri has been able to federate and get together. Today I'll try, and I understand we're actually ahead of time, so we'll have plenty of time for questions later on. I'll try to, beyond just showing you a bit of the vision we have having for embedded insurance, in my world we call it more ecosystems. I think ecosystem will definitely be here to stay for a long run. I also want to make it a bit more personal. I also want to make it that you get to know us, and we have a few colleagues in the room as well, because we are a very close community. It's really great to be together with movers and shakers in the industry, and I believe we should all have a common aspiration, where embedded insurance, where transformation of our entire insurance industry needs to be heading in order to remain relevant in the future for society, for individuals, and just for the broader economy. I will try to do that. If I don't, please, I'll pay drinks at the end of the session. Great. So my name is Adrien Lebegue. I've just been relocating a few weeks back. I spent a big part of my career in Asia, more than 10 years. I spent a big part of my career in traditional insurance. And I realized how much transformation was needed in order to get to where, as a user, I want to be able to consume and get protected through insurance. And I found a bit my calling, part of Zhong, part of ZA, that we're really focusing around making sure we create value for broader ecosystems, for end users. And I'm going to show you a bit how we're trying to push into that direction. That's the one, right? Yes. So first of all, everyone knows Zhong. I mean, who doesn't know Zhong? Maybe let's try the other way around. Okay, who knows ZA? Okay, here we go. So Zhong is the mothership that was at the first, probably the one of the very first, what back then was scenario-based ecosystem business models. But we've had a very long history since then. And we've actually been building global businesses under a different brand, tackling different ways in the market. We actually operate under two different business models. The first one under ZA brand, and this is operating primarily in Hong Kong and Greater China. And the second one is called ZA Tech. I am part of ZA Tech, and I'll explain to you a bit more later on today. First one is very simple. We want to be inspiring how to lead innovation, how to lead transformation, even in very mature markets, even in banking and financial services. There's been a lot being said about neobanks, putting the market upside down, disrupting the big, I would say, traditional incumbents, but actually a lot more needs to be done if we really want to move the market forward. And ZA Tech, basically, so ZA is basically a broader financial services company. If you haven't heard of it, I encourage you to look at websites and apps, because I believe it should give you a lot of inspiration in our day-to-day as enablers and partners for the broader financial services industry. ZA Tech is a pure global enabler technology company based in Singapore and operating across more than 15 different countries. And we are just entering European markets, and hopefully we'll find many shared thinking in the way we try to enable the whole industry. Why do these two businesses exist? Simply because we've been proving that with the right technology, with the right culture, with the right people, the right know-how, you can actually create value beyond only your own company. And where does all that comes from? Back to Zhong. So you probably all know, so I'll go a bit fast in it, but just back in the days, before ecosystem was a big thing, there's been a big bet being placed by the Amazon, the Facebook, the Allianz of this world, in order to build a digital native insurance company, embedded insurance company, and finding ways to grow, basically eliminate frictions in ecosystem business models, creating value for the entire stakeholders, and not just focused on sales and distribution. 8 years fast forward down the road, today Zhong is the 9th largest P&C insurance company in the world, in China. Sorry, we had $3 billion premium and a healthy profits level with about $200 million. And we've also been able, I think, uniquely to cover 50% of the population in China that has access to a mobile phone. The number is huge on its own, but if you think back about maybe what should be the ultimate goal, when we talk about financial inclusion, for instance, this is where the industry should be heading. The Allianz and the AXAs and the Generalis in the world should be aiming at covering much more broadly and widely, and basically aiming at reducing protection gap. This is really much what was being able to do, leveraging ecosystem and embedded insurance. But not only that, we've also been able to accumulate knowledge and build up very mature technology in order to support that vision, that ambition to close the protection gap. And just a number that is still very astonishing even for me, in 1 year alone, 8 billion insurance policies were issued by the Zhong business. So just in the grand scheme of things, this is a very big number. This is where it all comes from, but down the road, we've also realized that when you apply the right recipe on being relevant for customers, focusing on the user experience, focusing on solving pain points, you end up to be able to tackle much broader business challenges. And this is what we've actually been encountering, building a bank in Hong Kong markets. Hong Kong is one of the most wealthy, financially savvy, and educated markets in the world. There's a few hubs. I think London is definitely one of them. And everyone was just saying you will never be able to find traction in the market. HSBC is too big. Standard Chartered is too big. And we still manage to basically find our way using the recipe we've applied and through the learnings to basically build within just 2 years the 6th largest bank by number of customers in Hong Kong market. HSBC, Standard Chartered, Bank of China have been around for 150 years. In just 2 years, we managed to become a significant player with a pure digital business model, with a pure recipe around engagement, policies, communities, a lot of the recipes you've known, and I'm sure many of you also apply in your business. And by creating this entire ecosystem, that's why I come back to ecosystem in my view, more than embedded insurance. It is really how do you offer a holistic offerings, engagement, and access to protection to individuals and users. I won't go into each and every details, but crafting product proposition that individuals likes is extremely important to find your niche, to grow your niche, to create your brand. I think some people in the room, like Wakam, have definitely found the way doing this. We've just had a nice conversation before our call. Back to insurance, we still believe insurance has a value to be embedded and brought to individuals as and when they need it. We also realize that actually a bank owns and understands so well, so deeply, individuals in the way they transact, in the way they invest, in the way they purchase protection, that we can bring it to the next level. And I'm extremely bullish on the neobank ecosystem, but also traditional banks digitalizing the way they engage, the way they service, the way they basically create value for their customers and users. 500,000 users might sound like a small number, but Hong Kong is a small place. It's a 7 million population only. So you could say that within 2 years, the bank actually is basically has 7% of the population as customers. And I hope to find many examples like this also in Europe. And I'm sure feel free to raise points and ask questions on this. And then we realized that actually it's important to create businesses that can scale, because this is how you bring inspiration. But we also realized we would never be in a position to become a bank in every single market in the world, or to become an insurance company in every single market in the world. So we've had back in 2018 a very clear decision that globally, ZA will only become an enabler in insurance. And we did set up ZA Tech back in 2018, headquartered in Singapore and operating primarily in Asia, mature and emerging markets, and recently coming into European markets as well. Some numbers that might actually sound very small compared to what we said before, but we are still on our way. We've been able to support our partners issuing more than 300 million policies, which is, we believe, early traction in the market, and servicing more than 7 million, we call it monthly active users. This might not be very common in insurance, but that's the way we see engagement, value, and protection. We work across life, health, and P&C insurers to help them go digital. But we also help sometimes big platforms, especially in emerging markets where the access to protection is still very difficult. The education of agents and brokers is not always the same level than you see in some of our Western European markets. And we leverage platforms to be able to bridge that gap. That's very much where we create value. We have a team of about 700 software engineers and overall around 800 people at ZA Tech, so we're still a fairly small company. And we've had the privilege to actually be built jointly between Zhong and SoftBank with an initial funding of 200 million euro. We've had a Series A late November. I don't think it was much covered, but we've raised another 230 million USD for our ZA and ZA Tech business. I'll give you a few examples, because now that you know a bit who we are, maybe I want to illustrate that on how we create value in markets. First example was basically a line of business on the pet insurance that is huge in the UK and some other geographies, but somewhere not much happening in many other countries. And we never managed to crack it for many years, because fraud, anti-selection was always extremely present in that market. And if you don't control the entirety of the value chain, you're not able to actually write this business profitably. And we manage leveraging AI technologies to be able to underwrite, to be able to protect a much wider, I would say, communities with pets and cats, with something that might sound very silly. I'm not sure if anyone in the world is doing it, but nose print recognition, facial recognition, and body recognition, in order to make sure it's very simple. When you underwrite a dog or a cat, you make sure that when you have a claim, it's the same, in case the dog or cat doesn't have a chip. So it's very much in a way, and I see many smiles in the room, I had the same feelings at the very beginning. It's in a way where sometimes, leveraging technology, you can break through into market that no one wanted really to go without losing money, and still finding a way to cover much more wider the protection gap, to give protection to owners that love their pets, and make sure they can access the right insurance for them. We've done that in many ways. I won't explain into too much details, but we've done that the non-traditional way. I think, Eric, you were talking about, Franck, you were talking about affinity. In many ways, I see a way of affinity still being very relevant in the way you engage and access, but leveraging data and technology. And another one that might also ring some bell around many of you working with some mobility in the mobility ecosystem. How do we help alleviate pain points in the ride sharing, in the mobility space, creating parametric insurance products for platforms where you not only tackle end users' challenges in the way they book, in the way they got canceled, in the way they missed their flights. Travel delay, I think, is now become very, very popular product, and cancellation, but also helping platform, creating more value, more stickiness, more enjoyment for the users of their platform, and therefore reinforcing the network effect. That's what we did in collaboration with Grab and in collaboration with Chubb, and launching a regional parametric auto claims payout product, which has, the beauty of, being 100% trigger-based, so not having anyone needed to push the button to decide a claim, but paying straight through into the wallets of the platform, which, of course, is an experience, I'm sure many of you have tried it before, but is an experience we want to see more in the markets, including in Europe. That's all for my sharing, and I just wanted to recap some of the points about learnings and vision for embedded insurance, for ecosystem, for financial inclusion. And I wanted to keep them very simple, very neat. But first one, very importantly, I think we all need to think back on this, all of us in the room, is all about being relevant. Is all about understanding how do you create value? How do you help reducing protection gap? How do you help optimizing journeys? How do you help, basically, in the end, create value? I'm very, very attached to creating value in everything we do. The second point, very importantly, and I think this is still early days, insurance is not a product like any other. And focusing on the importance of building the right user experience, again, leveraging everything you could around data, insights, and profiling, is extremely important as well. Platform knows how to do this, but not for insurance. Insurers don't really know how to do that most of the times. And we still believe there's a lot more that needs to be done on, a delightful user experience. And last but not least, and I will leave it all of you with this challenge in mind, I still believe that beyond technology, beyond know-how, there is a huge change element that needs to happen. I know some of you in the room that really are at the forefront of transformation, innovation. But I think if we want to succeed as a group, as an observatory, as members very committed to make embedded insurance a big reality, we have to play the role of change agent and drive the entire industry in that direction. And if we do this, I think we'll all be able to strive very much for the coming decades. Thank you very much. And you've got my contact, but I'm just on LinkedIn, so it's also quite easy.
Thank you, Adrien. Thank you very much. Great presentation, very inspirational. Any questions for Adrien? Yeah.
Just by curiosity, on the previous slide, what is the trigger for your claim parametric car insurance?
So the trigger for the claim parametric, it is actually the duration of the delay or the cancellation by the other party, so the driver. So driver being late by 10 minutes will trigger an automatic payout.
Okay.
Andrew.
Thank you, Adrien, and welcome back to Europe. Are you entering Europe as an insurer, as a financial services provider, or just the tech platform, or all of the above?
Maybe you haven't listened to my presentation. No, so it's very clear that we are a technology enabler, and we want to help our clients and partners to learn from our experience and leveraging our technology. We know too well, back in Greater China, how complex it is to manage regulators, is one, and how capital intensive it is. We build a bank, right? So We know a bit the complexity there to never actually ever consider becoming an insurance company anywhere else in the world.
And a follow-up question, where in Europe are you focusing?
We open for business in many markets. We already have operations in Western countries. I'm actually based in France myself. Nobody's perfect. And a few of the colleagues in the room are in other key markets in Western Europe.
Thank you, Adrien. Other questions?
Thanks.
Thank you very much. And now I would like to welcome on stage Martin Einemo from Insurely.
There we go. Thank you.
Yeah, sorry. I need help again to
Perfect. We can just go back one slide, I think. There we go. Hi, everyone, and thanks, Yuri, for the invitation. I know it was quite late. I think we at Insurely are two things. One, the latest member of the Open and Embedded Insurance Observatory. I think that's right. We're also one of the few players here working actually with the open side of things. We have heard a lot of presentations today working with embedded insurance, and we think that is really interesting. What we are specializing in is open insurance and how we can leverage that in selling more insurance policies, understand our customers better, and optimize distribution. I really like, someone said something about customer value. That's in our DNA, and that's what we're trying to achieve. But I don't think a lot of you guys know a lot about Insurely, so I'm just going to take it from start. We were founded in 2018, just a few years ago, in Stockholm, and we have still our headquarters there. We are a little bit smaller company than ZA. We are 45 people today, but we're growing quite fast. We are registered insurance brokers. We are VC-backed. We just launched our Series A round and closed it in March with Insight Partners as lead investors. And we do a lot of things. We are primarily enabling data access and sales execution through our open insurance solutions. And that might sound very vague, but I will explain exactly what that is very soon. We are one of the award winners in Future 50, and we have a lot of collaboration partnerships already today, for example, with HDI, with BNP Paribas, with smaller insurtech companies such as Hedvig, such as ManyPets. But we are operating in a wide range of space, that is banking, insurance, neo-insurance, pension, life insurance, etc. Actually, we have over 40 different insurance companies and banks, and also fintechs as customers today around Europe. Today, we operate in the Nordics, in the Baltics, and in the UK. We have our site on France, Spain, Italy as well in the coming years. And actually, our services were used by over 250,000 users last year in the Nordics only. And I think that number is already broken today. But just going back to open insurance and what that is. So open insurance is, by us and our definition, in line with the EIOPA definition that we saw in the consultation paper for a year ago, the access to and sharing of personal and non-personal insurance-related data through APIs. That is forcing the insurance company or the insurance industry to share data through APIs, just as open banking did for the banking industry. So why is this happening now? We see a lot of driving forces out there. We see a lot of consumer needs that is changing. I think all the companies working with embedded insurance also see that. We see customers want to have digital experience for their insurance products as well, not just, all other products out there that you can experience digitally. We can do a lot of things today that we couldn't do before. We have tech capabilities that didn't exist 2 years ago that enables us to do really cool things with insurance data. And we also see a lot of regulatory changes. We see the EU looking into how could open finance look like in the future. What is the next step in PSD2? And that's something that we spend a lot of time with. Why is the EU have a spotlight on insurance and the openness of insurance data? Because of those three factors. I mean, customers need to know more about their insurance policies. They need to take better choices. They need to be more informed when actually experiencing their insurance contracts. So we are actually a B2B company. We're an enabler of open insurance solutions for banks, for insurance companies, for embedded insurance companies as well, for everyone who sells insurance products or where insurance data is interesting. We have seen a quite good progression in the open data landscape on the EU side and also in the UK. First of all, we started with open banking. That was the first segment for the regulators to open up. That was really successful. We didn't see any banks go bankrupt due to open banking, right? We saw a lot of innovation that was customer friendly. And the next step in the digital finance strategy is insurance, savings, retirements, and things that makes the customer journey around financial services better. So just before we go into how we do things and what we are doing in our platform and all the technical details, I'm just going to share a sneak peek of our use cases in the Nordics. We have three major use cases for open insurance data. That is the end consumer's personal insurance data that they share with you as an insurance company or a bank. First of all, we have the Insurance Manager, a product where you as an insurance company or bank can enable your end consumers to see all their insurance policies in one place. Either if you signed up for the insurance policies at another insurance company or at your bank or through your union or your employer, you can see everything in one place through our APIs, which also gives you a 360 overview of your insurance policies. It gives you conversion, it gives you retention, it gives you a lot of data to act on to sell more insurance policies to your customers. The second of all, which we typically sell to monoliners, neo-insurance companies, is our Insurance Switcher. It's a service that enables you to let your consumers compare their existing insurance policy with a new offering from you in real time. So one example is that we're working with a small home insurance company in Sweden. Their customers can choose, I have a home insurance and I want to compare it to a new one. Click, and they use our APIs to fetch the data in real time, and the user gets two screens. One, this is your current insurance policy, this is what you pay today, and this is your new offering from us. And they always lower the price, which means that conversion increases because the user takes informed choices. In this case, we have increased the conversion rate with 80% since day one, which is a pretty good number. But it comes down to empowerment of the end user. We have something called the sales support tool, which enables customer service, that is doing client calls, to access your current insurance information to give you better advice regarding your insurance policy. That has, for example, in one case, also in Sweden, increased conversion with 60%. It has decreased the time spent in advisory call with 50%. It has enabled the call center staff to actually see what kind of policies can I also sell to this customer, contributing to approximately 25% upsell as well. So there is a lot of power in open data and the ability to share data as an end consumer with your insurer or your bank. There is a lot of power in accessing that data as an insurer to price right, to know what kind of insurance policies your customer have, if they're price sensitive or not, which brands they have. There's a lot of power in that for the consumer, the distributor, and also for us. Just going back to what we actually do. So what we have done is build, I would guess, Europe's first open insurance platform. And it's illustrated here to the right. Our platform is here in the middle. It doesn't look like this. It's approximately a couple of 100,000 lines of code in a server in Frankfurt in Germany. But it's illustrated here. We have a lot of customers on the right-hand side. It's fintech companies, it's banks, insurance companies that all are interested in one thing, their end consumers' insurance data. And where does the end consumer has their insurance data? At their insurer, of course. So we are connected to, I think today it's a couple of hundreds insurance companies there in Europe, with the ability for you to share your insurance data with our platform, that in turn is sharing it to the bank, the insurance company, or the fintech platform that you are interacting with. So we are how can I say it? We're a back-end infrastructure service provider for insurance companies and financial institutions. We work with P&C, we work with life, and also retirement pension data that is interested for the end user. And you can do a lot of cool things with this. As I said before, some use cases, but I will go into some details how it actually works. Now it's a little bit low resolution, but so for example, our insurance switcher. Imagine you are a home insurance company, for example, as I told you guys before. You know that the majority of your customers already have an insurance policy, and they have an expiration date. They have a price, they have a policy that they do not know anything about. I would guess that not everyone in here knows anything about their home insurance policy. Anyone knows their expiration date, for example? I don't think so. I don't do that. That makes it difficult for customers to buy an insurance policy or to switch an insurance policy. So imagine you give your customers the following choice. Who is your current insurer? You should know that. Actually, the majority of people know that for your rental insurance or your home insurance. If I click, for example, at Allianz, we will ask you for your credentials or share your policy documents or scan your inbox to get your insurance data. We will take care of that. What will happen in the background when you click sign in is that we will connect to the insurance company, we will fetch the data, we will structure it, categorize it, and add on third-party data for you to have a true comparison between the current policy you have and the new policy here provided by AIG, for example, which allows you to not only see vital information about your policy. You pay 27 euros per month, you have Allianz, your expiration date is this, but it also allows you to compare the insurance policies in detail and not just focusing on price. So you can actually pick the right choice for you. Some people in some customer groups are picking the cheapest choice. Here I will save 2 euros, for example. But I won't get the ID theft that I had before, for example. So for us, it's always about giving the user the empowerment to actually choose the right insurance policy, whether it's price, or whether it's content, or whether it's deductible, or something else, or whether it's brand. And then you just click purchase. And as I said, our use cases so far, we have, I think, 15 or 16 use cases around the Nordics and the Baltics with this, and we see in average between 20 and 80% conversion uplift from day 1 till 2, just because the user is empowered and know what kind of choice they have in front of them. Because we don't think insurance is something that is interesting all the time, but we think that when you are interested in insurance, you should have the right information. Our next use case, which is a little bit more targeted to banks, is what we call the insurance manager. If you're a GI insurer or a bank, you would maybe perhaps wanting to give your customers the opportunity to collect all insurance policies at your My Pages or in your app. So using the same methodology to find the data, structure it, categorize it, you can instead create an insurance overview in your bank app, for example, or in your Generali app or something else. That gives you the power of data. It gives you knowledge about what other insurance policies does my customer has. Maybe they have 3 other policies at Allianz, 1 at AIG, with different expiration dates, different prices. And maybe that's a very good thing to use when you are targeting those customers. We know that you have this policy, we know you're paying this much, and we know the content of that policy. We can match that content for a better price, and our brand is pretty good as well. So this gives you a very, very good upsell opportunity, except it also gives your customers a feeling of control. And it gives you a foundation for advisory as well. If you can detect that the user doesn't have life insurance, for example, or they don't have accident insurance, you can quite easily sell up that as well. I wanted to show you one case study for the insurance manager. We're working with one of the largest insurance companies in Sweden, ICA Försäkring, with this. They're a bank assurance company. They do all insurance types. They have a bank. They are also selling food. They're a retail company. They have a pharmacy. They're a big company doing a lot of things. They wanted to create an overview for their customers, just as I described it, an insurance wallet or an insurance manager for their customers to stay longer in their insurance app, to be more sticky, to sell more bank services, to create this personal finance management and 360 view of your insurance contracts. So they are connected to our APIs, find the best insurance for you. They call it the insurance manager, basically. And you guys know that acquisition cost for an insurance policy in Sweden, for example, is, I think it's between 150 and 180 euros per person. So imagine you pay 180 euros for one customer to get in and buy an auto insurance, for example. And you get them to use this, and you see 10 other insurance policies. And what do? You make your call center call them and say, we see that you have 10 other policies. Would you like to switch them? If they don't want to switch them, it's fine, because you still have the touch points when the expiration date is, when the price increase time is, for example. You can always build in an automatic marketing automation to actually target the customers. So a few key results from this. We have several 100,000 people using this per year. We have, of ICA's customers, we have over 75% of their customers using our tech on a yearly basis. So 75% of the insured customers has collected at least one other insurance policy in their app using our APIs. We see a big uplift on sales, upside of, I think the cross-sell numbers is 25% from, if you have one policy, you are in average buying 0.25 policies per year extra due to this data. So for us, it's pretty interesting, and it's pretty obvious that open insurance and the access and sharing open insurance data is interesting in a lot of use cases. It's interesting for the customers because you can get a better insurance experience. It's interesting for the companies because you can give your customers better experience, you can make a lot of more money, and you can be much more relevant. But this regulation is very early on. I think it will be at least 5 years going forward before we see an open insurance regulation coming out there as a part of the EU's digital finance strategy. But we think it's a couple of things that is important to think about when we speak about open insurance and the sharing of data. Because if you do and use data in the wrong way, you can actually trick your customers more. You can use it to price customers in a bad way. You can use the information to give them worse products than they didn't need, for example. So first of all, we think that the open insurance regulation, when it comes, it should actually take stance in the value for customers. It should be customer-friendly journeys. It should allow comparison between insurance contracts. Maybe we can, in the future, compare Italian and Spanish insurance contracts, for example. That would be really interesting. Speaking about parametric insurance, as Franck talked about before. We need to support innovation. I mean, we need to make sure this innovation happens through regulatory. We can't trust the insurance industry. I'm sorry, you guys from the insurance industry. We can't trust you to share data mandatory. We need to make it compulsory to share data. We need to create win-win experiences. We can't just compare on price. We need to compare on price, product, retention. We need to compare on everything that counts and not just price, because then we will end up in a situation as, for example, in the UK, where aggregators are pushing down prices and margins. So we need to think about both the industry and also the customer. We're working quite a lot with the EIOPA and the EU to draft this regulation. And I'm really happy to discuss with you later as well. How can we affect the regulatory bodies to make this open insurance regulation successful and to be customer friendly? So that was just a sneak peek of what we do, how we see open insurance, what that is, and also what we think about the new regulation coming up. Thank you.
Thank you, Martin. Thank
Thanks.
you very much. Any questions? Yes, Vanessa.
Sorry, but very insightful. Thank you. I understand the value proposition for the platforms using, your offering, but for the insurance carrier, it seems like in most cases they just lose customers by sharing the information. So how did you get them on board?
That's right. It's a very valid question, and I probably didn't mention that. We don't need consent or partnerships agreements to fetch the data on the left-hand side on my picture. So when we connect to different insurance companies, we do it by consent of the end users. Think, for example, Played in the US. We're doing a lot of reverse engineering, web scraping, everything that is possible to get endpoints for the end user data. So that's something that today is reliant on the local legislations in different markets. So we having, in some European markets, the legislation about data sharing without official APIs, it's more difficult. In some of them, it's easier. In the Nordics, for example, it's much easier.
Okay, thank you.
Is this how you made up these 200 companies that you connected to? And where are they? Are they single companies or with each country?
Yes, so today we aim to have as full market coverage as possible on every market that we're in. So for example, we have 99% market coverage in the Nordics, where we started. We have a little less in the Baltics. We have a little less than that in the UK, since it's a huge market with a lot of companies. But it means that we have built integrations to be able to fetch data based on the user's consent on those 200 companies.
Thank you, Martin, for the presentation, and Vanessa for reading my mind. I had the same question. But now this is Insurance Switcher, but you showed Insurance Manager. Allowing actually to buy insurance. Did you mention it? Not sure if I understood correctly. So then for buying the insurance, you would need some kind of a quotation mechanism or an integration with the partner instead of just a consent from a customer. How do you deal with this?
Yeah. So typically our customers are in two segments, right? The ones that have insurance distribution already, the possibility to do quotes, to execute on sales, and they typically just buy data, to buy their internal insurance manager, and to then use that data to connect to their web shop, for example, to sell insurance. So we are just a data provider. We also help out with some front end as well, since tech development in the insurance industry is quite slow. Luigi knows everything about that as well. The second part is the companies that doesn't have insurance distribution, right? You want to do both. You want to be able to compare insurance policies, but you also want to sell insurance policies. So we actually also have an embedded insurance offering, which means that we can do both the comparison based on the policy you have today using our SaaS APIs, and also add on an embedded insurance component onto that, so you can do the full journey. If you, for example, are a bank that doesn't sell insurance today, you can add on both comparison, manager, and also distribution from us.
Hi, Martin. You started talking about open finance. So open banking, open finance, PSD2, and so on. What do you see in common between finance and the insurance sector? And do you believe that a common regulation is possible?
Very good question. I don't think we have that much time, so I can speak for 2 hours about this, but I'm really interested in this factor. I could tell you about the differences, though. I think PSD2 was great. It allowed you to share your transactional data. It's a lot of data volume. It's updated maybe every minute, so you need to have very stable connections to share that. On contrary, the transactional data is not that useful. You can't, as a bank, if you're buying a PSD2 API, you can't do much with it. You can do maybe credit scoring, you can do a budgeting tool, and that doesn't really give an ROI, right? But it's a lot of data. On the insurance side, we have much less data. Maybe we have 10 insurance policies. They're not updated until once per year, perhaps. So you have much less data velocity, less data volume, but the data is much more complex. You have insurance contracts that need to be translated into parametric insurance that could be compared. It's a difficult thing. But it's also much more valuable on contrary. So it's about when you have that data, you can do a lot of commercial things. If I knew your insurance data in this format, I could sell you a new policy in 5 minutes, since I can give you a better price and policy. And I can use the data to do pricing, to do price elasticity models, to do a lot of things that is not possible with transactional data. But the similarities is that both the regulations are aimed to make the financial life for the customer better. And I think the EIOPA and the EU is very clear on that in our discussions as well. This is something for the consumer to take better informed choices by data. We have seen the IDD, the IPIDs, trying to do that in a standardized way, but it doesn't really work. It's too high level. You can choose a little bit what you display or not. So this is an aim to make it better and easier for the customer to, in real time, take better informed decisions.
Customer value is the only
it
thing
is.
that matters.
Hey, thanks a lot for the presentation. I think it's a really interesting approach. For the insurance manager, as I understood correctly, you are integrated with a couple of embedded insurance products, so you can also sell the insurance products. But this is not with the 200 insurance partners that you mentioned before. And maybe towards claims and the post-purchase processes. This is, I guess, also only with the embedded insurance product carriers, no?
Yes, so the 200 we're talking about is our data sources. Basically, it's our product where we collect data from. So we're able to collect data from 200 different companies. When it comes to selling insurance, we collaborate maybe with 5 or 6 insurance companies to sell their insurance policies. But that's our, second priority compared to our data model, basically.
And all the post-purchase processes, do you also manage these via the...
We don't. That's handled by the insurance companies themselves. So we try to market position ourselves as infrastructure, not trying to have too much operations, just being data provider and do the piping between insurance companies, data, execution, and sales, basically.
Understood.
Hi there. For the customer experience side, I just want to understand that if I have a policy from Allianz and another policy from AIG, I have to give the consent for all of individual insurance companies. Am I right?
Yes, that's right. Until at least the regulation comes in force. So now the insurance companies won't really collaborate with each other to, if you authorize yourself towards Allianz, why should AIG trust that? So it's a trust issue today, I guess, in the insurance industry. So today, at every company, maybe tomorrow, only once, and then you will access all the data.
I don't know the Nordic side. Is there a centralized insurance regulation to have all the data in one site, like policies or health policies?
No, it's not. Actually, the insurance data is spread out in different carriers where you're actually insured. But I think why this is mostly, why we started in the Nordics and why we're most successful there, I think it's a couple of different cases. The Nordic population is quite used to this kind of services to share your data. We do share data all the time with our banks, insurance companies, and we have very high trust in that. We also have standardized login methods, single sign-on systems as well, like EIDs to log in to our insurance companies. So you maybe don't have to remember your passwords, etc., for every insurance company. That's different, for example, in the UK and other European countries. So the sharing of data differs a little bit between different markets. So it's quite localized in that sense.
Thank you.
I want to ask you a little bit about what you do with your customer data. I'm not talking about regulations, but you obviously have a lot of data collected from the preference or tendencies or all kinds of things. Let's say that all data is anonymized. What do you do with that?
I think that's a very good question. I think, first of all, GDPR and the user consent is, maybe the most important topic for us. We do never save consistently any personal PII or any personal insurance information at all. We do, however, save all data anonymously and remove all the personal traits with the data. And you can think of we doing a lot of things with that. First of all, the customers to us can get a dashboard to see where their customers are coming from, which are buying, which are not buying, what kind of price level they are at, which products they have. So you get a kind of insight in what segments are performing or not based on where they had their insurance currently. Second of all, we can also build optimal pricing models, right? So when we have a couple of million data points as we do today through our partnerships, anonymized, of course, and blended, we know that we have an extremely good overview of the market pricing on different segments for auto insurance, for example. We know that a BMW in Stockholm for this age driver in this area costs, we have maybe 10,000 different price points on that. But we're experimenting still what we should do with that data. We know that it's really valuable, but we also try to be careful not to overuse it either, because then we will undermine our position as collaboration partner with the industry. So we're not trying to oversell that. We try to do something interesting with it, some market intelligence, for example, but we can't overuse it, then our trust position would be gone, I guess.
Right. Thank you.
Great.
Okay, Martin. I think you had a lot of questions, so it's very good. There is a very big interest for what we do.
Thank you.
Thank you very much. And now I would like to welcome on stage Garrett Olson from Wolt. Hi, Garrett.
Hey.
Just give me a second. Here we are.
Great. Oh, killer. Welcome. Little bit different spin. So not an insurance company or an insurtech company. We're sitting on the partnership side. So there's some excellent topics that I'm following up today, and I think you're going to hear or see some of those in this presentation. So it's going to be really nice to kind of bring all these together. Wolt was founded in Helsinki in 2014. We're best known for the technology startup, platform, local commerce, started in food, have moved into a lot of different areas, which I'll highlight. Our mission is to make cities a better place. And we really do this on a wide range, right? We're developing software for logistics, financial solutions, retail software. We're also actually managing our own grocery stores, right? Under the Wolt Market brand. So we're doing a lot of different things. And in November 2021, a transaction was announced with DoorDash, US-based food delivery platform. And we closed the deal now in May, and so now we're joining forces with DoorDash, and we've been really working as one team since then. But I think one of the things that's really interesting about ourselves is that we're trying to build a digital shopping mall in your pocket, right? We started, as I mentioned, with the top floor, with food delivery, food court, then we went to the basement or the ground floor, and we started with groceries. And now we're trying to fill in the middle levels of the mall with different types of retails, different types of stores, boutiques, and the like. So in the next 75 seconds here, I want you to be introduced to the Wolt City, and you're gonna actually see all the different opportunities highlighted where there's the potential for embedded insurance. So yeah, like really good work by our brand and designers. They've been putting this thing together. All the different characters are representative of people that we're actually interacting with on a day-to-day basis. But let me put some numbers around what you watched, right? The global gig economy and the gig economy compared to the platform economy are different. The gig economy is essentially what you would consider the workers, independent workers, flexing in and out, freelancers. This is around $500 billion market. In the next 5 years, it's going to be a $1 trillion market. There's 200 million gig workers around the globe. 50% of those gig workers think that they're going to do this or are planning on doing this as a long-term career, right? Food and beverage, e-commerce right now is a $2 billion market. It's growing 25% year on year. We're making 100 million daily food deliveries, okay? Not Wolt, but specifically the industry. And the online food delivery market right now is only 115 million, right? But one of the things that's interesting is that that is going to be more than 350 million by 2030. One of the things that we're really sharing is that this is a very early stage. I think probably people here have ordered something and it's come to their house through a Deliveroo or an Uber or hopefully even a Wolt. But I would say that right now, that's only 7% of food and beverage sales. If you go and look at the transportation industry, which has gone through a very different maturity curve, there are more than 60% of transactions are on a platform. The last statistic that I'm going to share is on a daily basis, we are touching 6 billion lives, right? This isn't a Wolt number, this is actually a platform economy. So it's just a huge, huge opportunity for embedded insurance, lots of different financial products for 3 major players on the platform. And I'm going to go through that now, right? So who do we actually have? We have a tripartite relationship. Merchants, customers, and couriers, they're all sitting on this platform. Customers, what do they demand? Something that's efficient, it's quick, that they pay the same price that's actually in the store. We have merchants. 91% of the sales on the Wolt platform are new sales that the restaurant or store would have never had without something like Wolt. So it's something where they're really driving new business opportunities. And then the couriers, what do they want? They want something that's easy, flexible, that they can work whenever they want, that they're not restricted by language skills. They can decide when and where they work and for how many platforms that they're actually working on, right? And so each one of those individuals or participants, as we refer to, they're each creating their own data point. And that data point has a ton of sub-data points. And how does that actually then work? What we're trying to talk about is the harnessing the moment. So as you saw in that video, there was multiple participants in the video, but there was 3 key areas that is really being pressed. There's financial moments or interactions, there's physical interactions, and there's emotional interactions. And all of these have areas that require some type of protection, right? So on the financial side, you're looking at earnings for merchants and couriers. For financial, you're looking at security for the goods or the people or the transactions that are taking place on the platform. On the physical side, you're looking at the purchase of the actual goods, right? Or the purchase of the food. In addition, accidents, right? Those are injuries or damages that are happening. And then physical also in regards of the logistics, the actual movement of those goods. Those are all insurable events. But now if we move to the emotional side, why are people using the platform? Well, relief. Maybe I'm getting medication, or maybe I'm getting time back with my family. Joy. Maybe I'm getting a present, I'm feeling great about something, I actually able to do something with friends and family that I was never able to do before, a memorable event. Or stress and anxiety, right? People, oh my God, I don't know how to cook, or I have to have a huge thing for catering, or I forgot my Mother's Day gift. I need to get flowers to the house really quickly. So all of those things are also creating data points, right? The time of day, the city location, the demographic, the type of bank, like all of those moments are also creating data, right? So where are we seeing success today, right? From individuals like yourselves. We're seeing that in 3 major areas, right? One segment, the independent contractors, right? We're seeing products coming around to address those specific people. We're seeing pre-underwritten products, fuel cards or merchant line of credit, right? And on the third piece, we're seeing these kind of high frequency, low severity events, right? Accident or small property damage. Those things are out there. There's a lot of people competing for something best in class in those areas. Some things were mentioned today as well. But where do we need collaboration, right? We really need collaboration on modern versions of marine cargo. We were talking about that today. There's a lot of different components when you're moving an iPhone from an electronics store to the actual end customer, and they want to make sure that it's insured. The merchant doesn't want to sign a deal with the platform unless they know that if it's damaged or lost in transit, that it's still protected. Because a platform is not like a UPS, right? Or a DHL or et cetera. Motor insurance, health insurance, liability insurance, savings products, risk engineering for health and safety for the workers in the grocery stores, on the platform, even providing these things into some of the merchant space. And then last but not least, I think one of the areas is that there's very specific niches within these broader topics: fraud, cyber, and sustainability. So we're really looking to figure out how can we get some modern products, modern services, modern solutions that are actually based on real-time needs and situations that are coming off the platform. But let me talk about where our experience is today. I'm going to give you 2 examples. First one is around cyber. Second one is around our accident. Both of these we've used in InsurTech for the placement. On the cyber side, we're a cloud-native company, right? We started in 2014. We're on a modern tech stack, okay? We have so much data, terabytes of data flowing in every single day, but it's stored in an extremely modern way, in an extremely secured way. It's organized. The demographics of the people that are using it, playing with it, driving it, is a very specific group. The expertise around these types of individuals is very, very high. The hardware that we're using inside the organization is at its utmost modern, right, stage. We have a zero trust architecture. So when I go and talk to an insurance company, say, hey, I need to get cyber insurance. Well, Garrett, we need this and that, and we need to talk with our risk engineers. And I'm literally just sufficing an existing model around cyber. But they're talking to me like I'm, I don't know, Pfizer or Johnson & Johnson or Ford Motor or Maersk Shipping, but I'm not any of those. I'm a tech startup on a modern tech stack with zero trust architecture. I have none of those real issues, right? I may have supply chain risk, right? Or you may have accumulation risk, but it's not the same type of cyber placements as it is for some of the other companies I mentioned. So we used an InsurTech to help represent us in those conversations to be able to have a product, okay, quote unquote, underwritten for us. But what's the issue is that I'm actually getting punished for all of the malfeasance by other organizations because they don't have what I have, right? The digital transformation that they're aspiring to have, that's just how I was born. So cyber, we're working on trying to get something that's more modern and better for us. There's a lot of great companies out there that are focusing on SMEs, but we're not that any longer, right? And the courier partner accident, again, placed by an InsurTech here in the UK for the entire program. We bespoke that. That product is built from scratch. It doesn't exist off the shelf anywhere, right? We took couriers, focus groups, data from the years that we were actually not having any insurance for the courier partners, and we built a very specific product in Europe, which is essentially also being written into Israel. And then we went to Japan, and we said, hey, Aioi, could you build this product for us and go get approval from the Japanese regulator? And they did. And so we now have a global product across the world that is very bespoke to the Wolt courier. And what's been actually quite impressive is that it's independent contractor centric. The way that they do the claims handling, the way that they did the underwriting, it's quick, it's efficient, it's relevant, it's using real-time data, and we're able to change this thing in the middle of the policy, right? So I think one of the things that I just want to end on is that what's important for us when we're working with someone, that they have a global mindset, that they're a data-centric organization, that they're quick, that they appreciate what startups are and who they will be. And last but not least, that the person that we're dealing with has the utmost expertise, and that if we are able to do something together, that the incident response matches how we actually drove that brand new underwriting process, right? And why are we who we are? Well, data is our rocket fuel, right? What do we do with data? We capture it, we analyze it, and we act on it. And all those things are very quick, in real time, in seconds. right? We capture it, it's trusted, it's repeatable, it's compliant, we tag it so we know exactly where it came from and how it was used and how it was gathered and whose data actually it is. We add then and analyze, we add intelligence to it, we automate it, and then we apply it to a specific situation, an opportunity, challenge, or threat. Like this, quick, quick, quick. And we act on it, right? Quickly, it's refreshed. I think it's like even multiple times a second, right, that this data is being refreshed. You're sitting in the lobby and the food order is delivered, you already get the notification that the guy is already there, right? So this data is actually really, really quick. It's specific, and we measure the value on this. We don't just share data or make decisions without it actually being measurable. It was mentioned earlier today, and I completely agree. So one of the things that's exciting is that unlike some of the other areas that we have to work with, right? The insurance industry, you guys have been using data for a very long time, right? And you guys appreciate the power of data. But that also has an issue, right? Analysis by paralysis. An organization like ourselves that has so much data, you can ask for a lot of data, and you can keep getting a lot of data, but you need to know what you want to do with it. And if it's only to fill in the old underwriting models rather than develop something new, then that really becomes an issue. And I think it was mentioned today, but really, like, the lack of APIs across the insurance life cycle, right, from everything from underwriting to policy management to claims handling, it's a sticking point, and we need to be able to get past that. Building APIs for us, we can do that in breakfast. Like, that's what we do all the time. But we need others to do the same thing. So we move quick. That's what we do. That's how we are. We became a unicorn in less than 3 years, right? We're across 23 countries, now 26 following the acquisition. At the time of becoming a unicorn, we were already in 150 cities, right? So when we talk with companies, when we talk with partners, it's mind-blowing, right? They're like, yeah, here's an example, right? Like, we're going to go buy our property insurance. We're like, yeah, so here's the list of our offices, and here's the list of the grocery stores. But I just want you to know, by the end of the year, we're going to open up 250 grocery stores, right? And like, what do you mean? Like, that's how we work. We grow. There's no way to grow 100% year on year if you're not doing things at a very, very quick speed. And the thing that's important for us is that speed is not just in growth, right? It's really based on how we base the algorithm, right? We have a best-in-class algorithm in the way that we're actually doing the logistics, right? We have the highest efficiency in the entire industry globally, right? Food or items are no longer in transit for more than 30 minutes, and if the food never arrives hot, it isn't good. So the bag time, the food is in the bag for only 15 minutes, and we know this, and we measure this. If you call up, or essentially usually you're sending a message to our support team, the support answers within 1 minute, and it's resolved within 3 minutes. Okay, we have a 4.75 out of 5 on customer rating per delivery. That's extremely high, but that's all because we're using data for every single type of thing. We're generating data, and I think the thing that's actually most interesting is that we apply that data and we analyze that data for every single thing: the transaction, the transportation, the behavior of the courier, the happiness of the customer, the temperature of the food. Like, all of these things are being looked at and measured in seconds and being acted on in seconds. And that's how we're able to move quick, and that's what our expectation is of others when they work with us. Not necessarily a realistic expectation, but it's just to put it out there. This is how we work, right? So one of the things that I would actually like to end on here is like the challenge of riding a rocket, right? What's the challenge? The challenge is that you actually have to satisfy a real-time need. The issue that we see when we're working with some of the larger carriers or large kind of insurtechs is that it still takes a long time, right? Something that's executable in days and weeks, not months and years, because that need may no longer exist any longer. Those couriers may no longer be couriers on the platform. Those merchants may have already left their trial period. They're no longer on there. So the problem that we're trying to solve may not be the problem anymore. So we need to do these things really quick, and it needs to be real time. The second thing is a modern insurance life cycle. Awesome. We can totally develop a brand new underwriting model to actually figure out the exact type of coverages for the couriers, for example. But then we need to be able to handle the claim the same and easiest way. right? We need to get that money in the pocket. One of the things that's so happy that we're getting feedback from our couriers is that when we submit the claim to the insurance company, the courier has the money in his pocket 5 days later, okay, for the accident insurance. Like, that took a lot of work, took a lot of time. We're not doing it by API, okay? That should be a lot faster. We want to get that down to 2.5 days. But those are the things that is extremely important for us. Why? Because a startup. 3 months for a startup is like 18 to 24 months for a regular company. So we don't have time to wait for months to have some type of solution. So the issue is that we need to have a modern insurance life cycle: underwriting, experience, and claims handling. And I think I've beat the horse a few times. Speed is really important for us, right? It's important in developing, it's important in executing, it's important in reviewing. And I think one of the last things that's most important is that we're able to make, those 3 things should allow flexibility, right? It allows us to adapt and change and build things incrementally throughout the life cycle. So, thank you. I would really look forward to collaborating with anyone in the room. There's been some very great topics, but I'm going to end it on that, and hopefully I can answer any questions or talk with you guys later.
Thank you, Garrett. Any questions?
Thank you, Garrett, for the presentation. It was really insightful. One question I'm wondering after your presentation, because it looks like you have a lot of ideas for insurance products, a lot of needs in this area, and you also have this clear strategy with you being the head of insurance, right? So there's a clear focus on this part of your business. So I wanted to ask, how usually the partnerships start with the insurance providers, whether it's you who is the driver, so you first do the research and you know exactly what the product should be, or you rather engage the insurer in the collaboration from the very beginning of creating the value proposition for the end customer?
It's a good question. I would say we usually are assumption-based, and that's usually coming off of a specific requirement, a requirement from a merchant or a courier. Not as much the customers at the moment. The customers are obviously going to be the beneficiary of a lot of the different decisions, but in general, we usually start with a need. And remember, that need has to fit into the development platform. So we had mentioned, right, we were talking a little bit before this, we're looking at selling guarantee insurance with the cell phones or other types of like electronic products, right? We knew this was a need because certain retailers want us to have it, certain customers are actually, we know that they're purchasing that on other platforms. And so like, well, why wouldn't we do that? But we can't just like offer that insurance, right? We actually have to have that into our development to actually have the area to click on the button. Just like when you say, hey, I want to have utensils and napkins added, that box, that actually has to be created and developed, right? So that it has to also fit into the product roadmap. So for us, product is king. Product drives the entire roadmap. Product says, hey guys, we have a problem. Hey, insurance guy, go and help me find somebody. So that roadmap, that discovery is coming heavily interacted with the customer or the courier, because that's how we actually look, right? We look at financial, courier, operations, merchant, so we have different teams because we're building different software for each of those, right? The app that the courier uses is actually a different app than the customer uses, and is a different app, right, or software than the merchant is using. And so each of those have all of their own groups and own focus groups. A need is defined, that goes into the roadmap, and then when they start getting into the kind of development planning, that's when they usually bring me in, and that's when the solution, we're not going out and shopping though, right? That is essentially going, hey, I need to figure out the warranty insurance that I started with actually started out as a marine cargo, right? And then we realized, well, we don't have a transportation license in every single country, so we're not going to do a marine cargo for the 15 minutes. We're going to look at something that goes beyond or past the time that the good was delivered, right? But it actually insures from the time it was picked up. So that's how that actually was created. So that co-development then really starts kicking off at that point in time. Yeah.
Thank you. Any other questions? Excellent.
Cool.
Thank you very much. Thank you, Garrett. And now we have the last session of this plenary. We have the panel discussion focused on opportunities from embedded insurance in the SME segment. So we just now prepare the stage. And then in the meantime, I will ask to join us on the stage Vanessa Richer, Isha Patel, Keith Lewin, Flemming Bengtsen, and Mark Prinsloo, our speakers, and Vanessa, the moderator. Yeah, sure. We need, oh, sorry, I forgot to. Yeah, we need to mic.
Perfect. Okay, hello everyone. As Yuri mentioned, the topic of today's panel discussion is embedded insurance and opportunity in the SME market. My name is Vanessa Altrichter. I'm the head of partnerships at Kangaroo, which is a security company based out of New York. But we're also an insurance distributor, so we're embedding home and auto insurance into our app, which is why I'm here today. And I'm on the advisory board of the Open Embedded Insurance Observatory. So going to the panelists that we have here today, we have Isha from Patel from Hiscox, then Flemming Bengtsen from Nimla, Lewin from Codat, and then Mark Prinsloo from Superscript. Very nice to have you here with the panelists. We are representing a range of different point of views from both a data provider, an insurer, and enablers, which will give us a great point of view from all different sides. We wanted to keep this, since we all know what embedded insurance is now, and we all work in a space, we wanted to keep this as valuable as possible for the audience to dive right into the questions and get into the details of what is the opportunity for SMEs in the market, starting off with the background of the value proposition and kind of what are the limitations of that SMEs are facing in the traditional insurance space. Isha, if you would like to start with that, kind of just explaining what were the obstacles for SMEs in the traditional insurance sector.
Yeah, sure. So one of the things that's a trend that we've talked about already today, one of the key things that's come from this is around the ease for the customer. Ultimately, that is the thing that is driving the drive for this and the desire. We've seen it already in terms of everything from use of your mobile phone and things that you now do via an app that you could easily have done online before. All of these sorts of things are driven by ease of use and making things as easy as possible for customers. And I thought something that was mentioned earlier today about not thinking about insurance is a really prevalent point. Ultimately, insurance has been a grudge purchase at times, and trying to move away from that to make it part of your daily life and something that is taken care of automatically is something that really helps with that customer ease point. I thought that was a fantastic point earlier.
Anything else to add from your side?
Maybe just to add, a lot of the insurance SME market is still placed through traditional brokers. I think 1 in 2 people are still insured through brokers. So if you look at that as a model, the small business owner, in addition to running their business and doing everything else, then needs to find time to go and actually sit face to face with someone and carve out that time for relatively uncomplicated insurance needs. So that's definitely an opportunity for disruption.
Perfect. Now going straight to the next point. How is embedded insurance able to, I guess, overcome those past obstacles? Maybe if you want to jump in.
Sure. So I think from my perspective, I think what some of the major problems that we see in SME insurance.
1 second. I don't think. Do you hear him? No. Okay.
So some of the major problems that we've seen that SMEs struggle with around an insurance perspective is, as some of the other panelists were just saying, the ease of access and the relevance, I guess, of the point of purchase around insurance. So I think, what we've seen at Codat is the importance of ecosystems, again, a point that's been raised by some of the other conversations today. And from an SME perspective, I think there's a massive opportunity for forward-thinking insurers and brokers to leverage the major SME ecosystems where, SMEs are actually running their business, the likes of accounting platforms, HR platforms, commerce platforms, depending on what type of business you are. Building basically more relevant, more digital and more accessible products for SMEs.
Yeah, no, I'd agree with that 100%. I think it's about speed, it's about relevance, not only about the purchase, but the use case, as in, what are you actually what value are you giving them? And often that's to do with preventing a claim as much as anything else, and providing you can align those interests. I think that's really, really important, and it's something that you can only really do in a digital space a lot of the time.
Perfect. What I hear often about the motivators actually to embed insurance solution into non-insurance products is addressing the currently unaddressed. So question to the group, is it about addressing the currently unaddressed and basically growing the market share of insurance, or is it about improving the currently already addressed and the experience for the currently addressed customers?
Yeah, I could jump in on that. Can you hear me all right?
Yes.
Yes, I mean, it can be either of those things. If I think of, our sort of business, we open to both of those sort of channels. It's just about doing it in the most convenient way possible. So we spoke a bit earlier about marketplace opportunities. How do you make it so easy to get your insurance cover if you're going to be a courier? The courier's not probably sitting there before as a freelancer thinking, wow, I've really got to make sure I've got my necessary business insurance or logistics insurance in place. They just want a solution as and when they're going to enter that platform. And I think that same convenience aspect applies to if you're an existing policyholder or you're new into the market, you're looking for that, that need and that timing to be optimized.
Yeah, again, just to add to that from my side as well, I think it's both basically, right? There's opportunity to transform the way SME insurance is done at scale. I think it's something that's been left behind by the traditional models for insurance, and there's huge opportunity to just progress that at a general market level. But also, I think Flemming will be able to talk to this in good detail given the work they've done at Nimbler, but effectively create new insurance products that haven't historically been possible by serving SMEs in a way that, due to digital, due to efficiency, due to scale, you can basically create new insurance products, offer new forms of protection to SMEs that are obviously increasingly relevant in a digital world.
Thanks. Yeah. No, I guess just to sort of expand on that we do credit insurance, which is traditionally a very corporate product, and we brought it right down to sort of micro SMEs. And it would never have been possible if we couldn't do it digitally, because we couldn't have humans doing any underwriting processes, which is the sort of traditional way. And so we've been able to expand that product into a completely different sphere, which has been, very successful.
Perfect. On to the next one for Kit. You're enabling firms to use data for better underwriting. And I think collecting data, and that's what we also heard from Wolt, is great, but unless it's actually used in underwriting and in the premiums, it's not actually benefiting the customer. So how are you getting from collecting the data to actually it benefiting in underwriting and in the premiums of the customers, maybe with a use case that you can share in working together with them?
Sure. I mean, I think this is one of the big opportunities about some of the work that we're doing at Codat for insurers. I mean, again, what we're doing is enabling forward-thinking insurers and brokers to obviously use real-time financial data from the financial platforms that are typically used by small businesses. Why is that exciting from an underwriting perspective? Because effectively, as it stands today, every major SME insurer for the major lines of business has the exact same underwriting model, if we're totally honest. So, the opportunity to evolve that using new data sets presents a huge opportunity for, forward-thinking insurers to basically have a unique underwriting model. And I think, again, with Flemming up here, probably the best example we can talk to is some of the work that they've done. So again, just for context, Nimbler are a partner of Codat. But again, I think Nimbler have done some great work where they've been able to leverage accounting data and seen, vast improvement from an underwriting perspective. But yeah, again, maybe I can refer to Flemming to add some context on that.
I'll add you to my sales team. So I mean, I guess the way that we work with Codat is kind of is unique in the space for credit insurance anyway. But what's been great about it is that we can focus on what we do well, and they can focus on what they do well, which is the whole the whole element of that openness. But what we've found is that we've been able to build new underwriting models that significantly outperform the traditional models, so that our where we have the sync data and where we have embedded APIs, where we have real-time data, our loss ratio is 24%. Where we don't have it, it's 50%. So it's fairly obvious which direction we need to be going towards. But what's really, I think, really good about that is that has stood up. Now, when we talk about that in the context that we've been going from we've been underwriting since 2018, there've been some really stressful markets, especially for credit insurance, and that has stood up across that entire period. A lot of the incumbents traditionally come back and go, okay, you've just got a very short window, and that it will collapse in the long run, but it's actually standing up.
I think that's super interesting that you are sharing that you are actually able to decrease loss ratios. I feel like there are some claims that are being thrown out, like we're lowering CAC by enabling embedded insurance, and we're able to decrease loss ratios, but that there are actually use cases also here on the stage that confirm that is really exciting to hear. Maybe going to Hiscox as a carrier, what are you looking to achieve when partnering with enablers or enabling distributors to offer insurance products through non-insurance products?
Yeah, sure. So at Hiscox, we have a partnership with Free Agent, which is a cloud accounting platform here in the UK, and I'm really part of the motivation behind partnering with them was a lot around that customer satisfaction point that we've talked about, and then also the increasing acquisition costs in the industry. We were talking over the welcome drinks earlier around the drug that is Google and pay-per-click and all of the rest of it, and I'm really Yuri's vision around embedded insurance becoming a key pillar of the insurance industry, and a key distribution channel, I think, is a really clear one, and one that we definitely share that view that that's the way that the market is going. And back to this point around like customer satisfaction, ultimately as an insurance carrier, we have happier customers, happier P&L. Basically, we're gonna have a situation whereby it's more attractive to be insured in this way. We can collect more data. We can understand customers better and help them to manage their risks appropriately. So we see it sort of as a win-win on all fronts.
Perfect. So and you're also saying you're definitely lowering your customer acquisition cost through someone like Free Agent?
I think we're at a junction here at the moment in terms of the adoption of the technology. So at this moment in time, I would say, without pulling the stats out or anything like that, but it would be more expensive given the investment that we're making in the technology. Really, this investment is going to pay dividends as we reach scale. And at the moment, I would say that the adoption is fairly early on, but we're seeing some good positive signs that encourage us to still believe that this is the right path to follow.
Perfect. Maybe another question to you. Are there any SMEs you're focusing on? Any area where you say you believe this works best for you?
Yeah, so, Hiscox are a specialist insurer. Our heartland has been technology consultants, management consultants, and then PI-led sectors. So at the moment, they're the sectors that we're focused on finding opportunities in, basically. As a carrier, our opportunities are dictated somewhat by our appetite as a business.
Perfect. Now, as we know, there are a range of different businesses. Each business looks different. They have different profiles, different size, different type of risk. So me actually coming from more of a home insurance side and auto insurance side, which is more or less, I would say, pretty much standard depending on the value of your home. I was wondering, how are you able to embed products for SMEs that all look different and basically customize them to their needs? Maybe starting with you.
That's a difficult question. I mean, it sort of lends itself back to what your distribution channels are. So, if you're looking at something like Superscript, we're quite focused around marketplaces and platforms. So we've got a particular profile of people that, might be, say, in the beauty industry, going into the home to perform services where they're actually required to have insurance prior to operate on that platform. But I think as an insurtech business, at the heart of what we've got is we've got the ability to, in a digital way, offer an insurance solution to the customer and remove that complexity. So, when one gets under the skin, that same value proposition's there. It then becomes a case of which routes to market and which distribution partnerships might fit a particular sector. So we tend to look for a sector-based approach, and I think the one thing that's come out of today's conversations is going back to that unmet need. What is that real pain point that you're trying to solve? And again, something like platforms and marketplaces is something where we've had good success in helping someone know, look, you need some form of liability cover. We're going to make it really quick and easy so you can get onto the platform, get working, get earning. That might be one example just to put out.
Perfect. Do you want to add something?
I was just going to say that I think that the one thing that sticks out to me in the same point is in relation to embedded insurance enabling obviously access to new forms of data that allow you to use that data in a way that Wolt's presentation actually just quite nicely demonstrated, but to basically transform the way in which the market served. And again, applying that to an SME perspective, exactly as you suggest, I think the historical approach from the market has been to try and put SMEs into different buckets that suit a certain underwriting model. And the reality is now that data availability means there is the potential to understand the nuance of individual business, underwrite them for the business that they are and the business that they might become, and also use that real-time data to evolve that cover as they're needed. So that feels like the big opportunity from my perspective.
Perfect. I actually have another question to you, Flemming.
Okay.
I was just wondering if you could walk us through, because I understand, and I feel like several here have that obstacle, is they have data, they're looking for a product, that product might not exist today. So how you got from having the data to actually creating the product to then offering it to your customers, did you become a captive, or like what was the setup in which you went to market?
Yeah, sure. It was a long journey, and certainly I think 5-6 years ago it was quite a challenge to even get any kind of capacity at all. But we went down the MGA route, and we are still an MGA. We have aspirations to have a captive, in fact. Hopefully to do something a little bit more creative, namely about giving back some of that, the benefits of that low loss ratio to our users, and hopefully going to more of a mutual place. But what we actually started with was a line slip, because we just needed to get up there. We started in the FCA sandbox, which was, I think we were in the second cohort of the FCA sandbox, and it was literally, we just needed to test the value proposition and see if someone would actually buy this crazy product in the first place. Fortunately, some did, and that's really where the journey began. But it's, I think, one of the key things for us was, even in those early days, was the learning was that the data is absolutely key. Even in those first sort of 40 policies that we sold on that line slip, we could see immediately some of the challenges. The first one was that we insisted on having a synced bank account and synced accounting, which was a massive hurdle for a startup to come out there and ask people to share their data. That was pretty challenging. And so we sort of lowered that bar, but as I said, over time, we've then found that if you don't have that bar in place, the loss ratios are different. So there's lots of different challenges as we've gone along. But I guess one stat that sort of hit me this year was that I think millennials are turning 40, right? Which is sort of that kind of age where they're starting their own businesses and all these sorts of things. And these are people who are completely digital natives, right? So they are going to have cloud accounting. They are going to have, they're much more willing to share their data. So I think, you still have to sort of look forward and look to, the fresh books of this world and stuff, and that is the way it's going in the long run.
Perfect, thank you. Maybe for Isha, if you could elaborate a little bit on what are the obstacles for adoption in the market for embedding embedding insurance for small to medium-sized businesses?
Mm-hmm. Yeah, okay. Well, I think the biggest one from an insurer perspective is around how to simplify the product enough to reduce the reliance on information that you don't have. So the beauty of embedded insurance is that you can collect loads and loads of data and use that to make a decision. The difficulty for an insurer, from an insurer's perspective, is sometimes that's not the data that you're used to making the decision based on. And to make that mindset shift to using the new data that you have, although there's a lot of it, it's different, and that takes time, and yeah, it requires quite a big leap from where traditional insurers have been so far. So from an insurer's perspective, I think that's the biggest obstacle.
Okay, thank you. Maybe from an enabler standpoint, what are you seeing as being an obstacle for adoption?
I think, people are creatures of habit. So at the moment, the way the UK market is working, it's still quite heavily dominated by brokers. So it's a broker-based market, and typically with insurance, people don't tend to move around a lot. I think actually getting embedded insurance to work, notwithstanding the underwriting complexities and those components, the landscape looks good if the players can be focused on finding that moment of need and solving an issue at that particular point in time. I think adoption will be strong.
Okay. What is your take?
So I think one of the things that I think has maybe been a barrier has been some of the digital ecosystems and maybe their understanding of the opportunity and the relevance of insurance for their customers. So again, speaking from a Codat perspective, we were to talk about major accounting platforms, so the QuickBooks or Xeros of this world, or even the commerce platforms. I think from our historical discussions with those partners of Codat, they're not insurance experts. They don't necessarily understand that world. But again, we start to see that changing. Obviously, the work that Hiscox have done with Free Agent. There's lots of news recently. PayPal, so again, investor and client of Codat, but they've recently signed a partnership with Aon. And I know lots of people are starting to focus on this, but it's almost, the partners waking up to the opportunity to help their customers with insurance propositions, maybe, that I think has historically been a barrier.
Anything to add?
No, I mean, I think the incumbents are often very hard to work with, and I think a lot of the challenges we've seen around sort of, people saying that they have a marketplace, and all it really is a logo. It's not actually embedded in any way, shape or form. It's just a logo with a referral, and you know, I think that gives the wrong impression. I think it's sort of innovation tourism, as it were. It's just it's not real innovation, and it's not real digital, and it's not really embedded either. But yeah, things are changing, definitely.
Yeah, even, I know these are the panelists, but even I am seeing that. I feel like if we're mentioning there's a home security app that offers home insurance, it seems very new to everyone, meaning there's not as much awareness for the opportunity to even do it, so that there needs to be like just general awareness of, you know, the connection between non-insurance products and insurance products, and that can be offered. I feel like it has been come up a couple of times now that brokers can be an obstacle, or kind of are in the middle in the sale. So I'm wondering, how can they be part of the journey? Are they part of the journey? Can they be part of the journey in the future? How do they play within this equation? Whoever wants to give it a shot.
I'm not sure I've got the silver bullet on that one, but they certainly could be. You know, we're an increasing, modernizing and just digitally led world. I mean, we've seen that kind of come out as a really strong theme across all of the presentations that happened. So I guess that could work very well in the marketplace. Again, if you're prioritizing the customer, the convenience, the need, etc. It's just how one brings that together.
I think one of the interesting. Oh, I lost my.
Yeah.
I'm still good. Okay, good. One of the interesting points around brokers and their role in the market is then the point around advice. So at this moment in time, a lot of the embedded insurance solutions are like not without advice and trying to be a smooth technology solution and staying away from that. And that makes sense at the level of the market that we're accessing at the moment. But if we look further into the future, I think actually it could be interesting to see how embedded insurance and advice could work together.
If you maybe think of the Wolt example from earlier on, the level of effort that went into actually building the courier product from the ground up, that would have given, you know, those end users a hell of a lot of confidence that they don't need the advice because the thinking work's been taking care of it for them. So it's just a slightly different take on it, I guess.
Absolutely. I mean, and again, what I would say, as Isha suggested, I think, you know, given the portion of the market embedded insurance currently serving, it's not been overwhelmingly relevant. But as that grows, I think embedded still offers brokers the opportunity to transform their model around SME insurance, right? So brokers traditionally offer advice. The annual average premium, I think, for an SME is maybe £300, £350 for you know, the average SME. It's not scalable for a broker to offer risk advisory to an SME at that level. So it's more a question of how can brokers start to leverage the same capabilities to actually transform risk advisory in a way that's relevant.
Perfect. Anything? Very good. Great. I think we can open it up to questions for the panelists, if there are any.
Yeah.
Thanks for great discussion so far. When we talk about embedded insurance, we talk a lot about, you know, removing obstacles from the sales journey and make the customer easier to purchase the insurance policy. They always want it, right? But at the same time, I kind of see in the world out there a lot of cases where people have tried to remove the obstacles where it doesn't really convert either. Do we spend too much focusing on making smooth tech for our users, and too little on desirability for the insurance policy, perhaps? What is your view against those two sides, perhaps? Desirability of insurance contracts, how do we increase that, while at the same time removing obstacles to buy?
I think for me, the two things are actually very similar. So one of the bits of feedback that we get from customers all the time is trying to make sure that they've bought the correct cover for their business. So the intention is there to go out to buy the right cover to protect their business, and they buy the products accordingly. That's what they want to protect. But I still feel like in a lot of instances, what the problem that we focus on trying to fix is to give that customer that feeling that they have done the right thing, and the confidence that they then got the correct cover in place. And I think that by making the process smoother, that solves one part of the problem, but actually embedded insurance as a whole also solves the second part of the problem of helping the customer to feel like they've got the correct policy in place for what they wanted to cover. And the bonus that can be maintained moving forward without them having to remember that, okay, I'm going to need to make a change. So I think just blindly trying to improve the sales process is not going to solve the full problem, but that can help with those other elements to it.
Other questions? Yep.
I think when we talk about embedded insurance, it's always about the acquisition of that customer. And we've not heard a lot about the retention of those customers. And as from an insurer point of view, the retained customers are quite often the more profitable. How do you see the embedded on the acquisition encourage that retention as well, especially when customers maybe don't have a claim? And especially now there's platforms like Insurely that do the product switching, where customers may be more happy to shop around. So how do you see the embedded for SMEs go into retention? And I give you an example. We interviewed an SME in my previous life who quoted the insurance cost of my P&L is the quietest operating expense. And that was something that stuck within AXA for years. So how do you get a solution for that through the embedded acquisition process?
Personally, I think about if you're going to make it sticky, you have to be solving the problem at its core. And certainly what we try to do is we don't actually focus on the insurance. The insurance actually just enables a lot of other things. So we actually focus on the mitigation of the risk itself. So we're actually trying to be involved in their day-to-day processes. Specifically for us, it's around the invoicing and the credit risk and the credit control. So that's the tool that we give them. And so that's actually the value. That's almost like a product in itself, and the insurance just sits behind it, so that hopefully when they come to renew, for us it's a transaction by transaction thing, so they don't even have to think about it. But yeah, in terms of sort of people trying to steal them away from us, we've got one extra sort of thing that's hopefully embedded in their day-to-day operations that means that they don't want to switch.
Maybe also just a slightly different example. I think if you will retain customers if you're servicing them effectively in life. So one of the things we see in the SME market is the needs are changing quite rapidly. So somebody might have taken out the insurance policy when they were a one-person business or a two-person business. All of a sudden they're quickly taking on employees. That means they might need employers' liability. Certainly in the UK that's a requirement by law. Or they might be bidding for a contract where they need to have a higher level of liability cover. So it's being able to respond through an embedded proposition quickly in life to those needs of the customers. And I think by virtue of that, you'll get excellent retention because of how you've serviced the customer. And then claims is the other important aspect, but maybe a separate topic.
One question about, let's say, the So we have talked about embedded and open insurance throughout this afternoon. Do you see something stopping this wave? So is there any big threat that we all in the room should be aware of?
I don't know if there's a threat. I think I would say embedded insurance probably isn't appropriate for every type of commercial insurance product today. Again, there are little niches where it's going to be incredibly relevant, and they'll grow. And again, I think Hiscox and Nimble are both great examples of that. But again, there are obviously very complex lines of business where it probably isn't appropriate to completely embed a digital product. So I guess it's a case of the individual situation, but that's probably what I would say on it.
Yeah, I think that I guess just pushing that a little bit forward, it's that, you know, if you get too fast, they clearly haven't read their T's and C's. So yeah, there's an element of that, and you know, you'd have to have a very, very simple product for someone to read and the full terms and conditions, or even the IPID in seconds. So yeah, that is a danger, I think.
If I can add one thing, more than a possible blocker, more a condition that need to happen to make of embedded insurance and the models that embedded insurance can enable, like digital ecosystems. One thing that need to happen to make of those new models huge is having the big distributors, the big platforms, the big marketplaces, having them on board, to explaining them the opportunity that embedded insurance can represent for them, and pushing them to try embedded insurance and to do embedded insurance on top of embedded finance that they are already doing. So this is not a blocker, this is something that for me, but not only for me, needs to happen in the future, in the next years, to make effectively embedded insurance exploit its potential. And this is something that we are willing to do as an observatory with your help. Any other questions? Okay, so thank you very much. I think it was a very good conversation, so really thank you very much for your time. I am sure that you have enjoyed it. And now there is the final session, and then we can go downstairs for drinks and refreshments. So thanks a lot. Thank you very much. Sorry, it's blocked. I'm not able to go in. Oh, yeah. Yeah, I'm not able to go in full screen. It's not my day with the computer. It's not your full screen day. Okay, so really last session. I will be very, very quick. So I wanted to anticipate you that after asking your time and sometimes even gently pushing you to have the information for the report, finally we are there. I wanted to invite here on stage Matt Connolly from Sønr, or Matt Ferguson, or both, as you prefer.
Thanks, Yuri.
Thank you, Matt. To present the report, the Open Embedded Insurance report that we are just finalizing, and where Sønr is our partner. So, Matt, up to you.
Well, thanks. What to say? Well, first of all, Yuri, congratulations on getting us all together in this room and for the last 9 months of your business building. It's incredible. It's so much fun seeing so many familiar faces and also talking about a topic that, so I've just been to, what was it, ITC in Asia, ITI in New York, and almost every single panel was embedded. Okay, so it's a hot topic, we get that. I think really what's interesting for me is how the market is going to change as a result. We've got everything from people talking about the APIs and the piping all the way through to the distribution, questions around claims. How is this going to carry out and play out in the market? And I think what we really need is someone who centralizes us all, brings us together. And Yuri, I think you've done a good job of that. And I think from, for those who don't know Sønr, just a little context, it's actually really nice. We've got a load of clients in the room today, but we are a market intelligence business. So we track millions of businesses around the world, and we use that intelligence to help better understand how markets are changing and who the companies are that are driving this change, right? So open, embedded, it's a key area of focus for us from a trend perspective, and also for our clients. They need to understand, so we work with everyone from the insurtechs through to the carriers, the reinsurers, the brokers, and they need to understand how this will affect their business going forward. And I think, so I had a lunch with Adrien and some of the Zhong guys, and we were talking about, 5 years ago, how the world was the incumbents versus the startups. And at that point, it was very much, they're going to be stealing our lunch. Are they going to be stealing our lunch? Will they steal? Who knows if they're going to steal our lunch, right? And we kind of rolled forward 5 years, and we realized that actually we're an ecosystem of enablers, right? And Zhong or ZA Tech is a great example of that, coming over to Europe, and they're looking to work with and advance the industry as a whole. Now we're talking with our clients who are, rather than looking over their shoulder at kind of competitor A and B traditionally, they're now looking at who and what Amazon are getting up to and Google are getting up to, and right? And it's the retailers, it's the banks, it's the whoever it be. And I think at the moment it looks like a great change and a great threat, but I genuinely believe what we're going to see over the next few years, and hopefully it'll accelerate a little bit quicker than what we've seen to date, because I don't believe my narrative has changed that much in 5 years, but I genuinely believe in the next 5 years we will see some change, maybe. But I think what we're going to see from an embedded perspective is actually we're going to be working with those partners. So when you talk about and you cite, as you just did, the Amazons of the world, bringing them into the observatory, working together as a community, I think that's really critical, Yuri. So yeah, so here we are. We have a report. I'd love to play up the role of Sønr within this report, but genuinely, hand on heart, Yuri's done all the heavy lifting of this. So we've just provided a little bit of intel and support where possible. So Yuri, I'm sure you'll go into more depth, but it's one to get your hands on, and it's great that Yuri, you're not only doing this, but you're giving back like this to the community. So good job, fella.
Thank you, Matt. Thank you very much. So yeah, really very quickly. So it's nearly finished. I think we're going to publish it for sure. We're going to publish it by the end of the month. So there will be an initial forward. Then there will be an overview of embedded insurance, what embedded insurance is, how we see it. What embedded insurance can learn from open banking with a contribution from Mary Walker from Open Future World. Then an overview of 2 open insurance regulations around the world, so from Brazil and from Australia. Brazil have an existing open insurance regulation. Australia is going to launch one. Then to focus on 2 key themes on embedded insurance, so the evolving landscape of embedded partners with the gentle contribution of Altus Consulting, And I focus on APIs and API management from Luigi Alicante from your platform. And then the second part of the report will be made of executive interviews and use cases from the companies that have contributed to the report. So we have many of the members of the Observatory that have contributed, and those are the contributors, the persons that have provided us with the interviews particularly. So I would not mention all of them, but you can see who they are. So all members of the Observatory with very, very interesting insights. As I said, our partners, Sønr, contributors Open Future World, Altus Consulting, Mia Platform, Finances Tech that provides us the overview of the Brazilian open insurance regulation, and InsurTech Australia for the Australian one. Now, very quickly to finish, a few updates from the Observatory. We have a few new members: Insurely, Nimbla, BlaBlaCar, InsureQ, Cover.io, Octamile. So now we have a member also from the African continent, Octamile. We have 3 new ecosystem partners: InsurTech France, Swiss InsurTech Hub, and Naya One. I'm sure that there are a lot of synergies that particularly that we can establish with Naya One, which is a leading open banking and open finance provider. And there is Karan here with us, and I'm sure you will be happy to share thoughts and insights with him. Next appointments of the Observatory. So presentation of the work plan for 2023. We are going to do it now with you in the next weeks, months, to present you our plans for next year and the services of the Observatory. Our webinar series, so in July we are starting the webinars. So we have proposed you several topics. We have received a lot of applications, and the applications are still open. I will send a reminder on all the topics that we propose. And our proposal basically is tell us what topics you want to are particularly interesting for you, and we will build the webinar. You will be a speaker during the webinar, and we will run the webinar, promote it, so it will be an interesting opportunity for you to share your views. And then in September we will start our second research stream. And the really last thing, we will be present in Germany next week at the InsurTech Symposium. We've been asked to provide, to participate to a panel discussion on embedded insurance. And Thursday, this week, we've been asked to make a presentation on embedded insurance at Insurance 2025, organized by Insurance Times. So if someone of you wanted to join us at Insurance 2025, we have an open invitation for the members of the Observatory that want to come at the event. It's this Thursday here in London. That's it. So thank you very much for being here. I hope you have enjoyed this event. I did, honestly. And so, yeah, thanks a lot. It's a pleasure of having this amazing community of people and of companies with us. It's the start. This is just the beginning. We started 9 months ago with 0, and we have this now. And I'm sure that in 1 year time, 3 years time, we will grow. And obviously, it's great having all of you in the Observatory, and I'm sure that we'll be able to do big things together. So thank you very much. We have drinks and refreshments downstairs.